Good morning, guys. Finally. Okay, so we are here for the Cost and Management Accounting Crash Course, which is your paper 3 in CA Inter. And my name is CA Kriti Goel, and we will be covering this paper in the next 5 days. Okay, so a little bit about me. Some of you may be my students. You would have attended my regular classes. Some of you may be attending my class for the first time. So I handle cost and management accounting. I'm a chartered accountant. I finished my CA in 2011, after which I worked with Reliance for a couple of years in the internal audit team. And then I decided that teaching was my passion, and that's when I quit and I joined Samvit Academy, which was the name of Advait Learning earlier. Okay, now we are known as Advait Learning. I'm sure you know CA Punarvas Jaikumar sir. Yes, who doesn't know him? So he is my colleague and we've been working in Advait Learning ever since. So that's a small introduction about myself. Now going to the subject. What is cost and management accounting all about? Okay, so first of all, like I already asked you, how many of you are scared of this subject? It's okay, raise your hand, no problem. Okay, quite a lot. So this particular subject is known to create a lot of phobia among students. Okay, so don't worry. What are we going to do in this crash course? Now we are going to cover all the concepts, okay, that are required to solve problems in this particular crash course. So for the next 5 days, I'm going to give you a day-wise plan in a while. That is, which day we are going to complete what particular topic. Okay, so we are going to be covering a lot of concepts. We are going to be solving almost 70 plus questions in class in the next 5 days. Okay, so now what are these 70 plus questions? So what I've done is, for each chapter, I have taken big questions, okay, which will typically come for 10 marks, okay, and I've put them in the material. And along with that, I have also included some small questions. Okay, what are these small questions? These small questions are those adjustments which come in bigger questions which trouble us. So when we read the problem, we are like, wow, what an amazing problem. I totally understand this problem except for this one particular adjustment which is very irritating. I'm not able to understand what to do with it. So those adjustments have been picked. They have been there. I've made cases out of those adjustments and I have put them in the material. So we will be looking at those adjustments also. So if that adjustment were to come in a big problem, you know how to solve it. Okay, so we are going to do big problems and we are going to do these smaller adjustment problems, okay, which will help us in clearing our concepts thoroughly. Okay, and these are the adjustments which come in most of the problems that come in the examination. Okay, and apart from this, we are also going to do the RTP, which is applicable for this particular examination. So some questions I will ask you to solve at home. Okay, I have already recorded some videos on those particular questions. I will be sharing the links with you because we don't have so much time, correct? So some part of it we will be covering in class, some part of it you will be covering at home. Okay, but we have to do this together. Okay, so the current RTP we will be completing for sure. Okay, some questions that I've already recorded, I will be sharing links with you. So what do you have to do? After we finish that particular chapter, go back home, revise that particular chapter and sit with the RTP question. Okay, if you get stuck in the question, then what do? Then you open the video and figure out what I have done. Okay, but first you will try to solve it on your own. Okay, and some questions we will try to solve in class depending on how much time we have for our entire syllabus in those particular 5 days. Guys, is it okay? Everybody? So now I have given you the material, correct? So your material looks something like this, right? It looks like this. So your material is called as the Costopedia Fast Track material. So this particular material consists of all those concepts, which is almost 80 to 90% of the syllabus, which we will be completing in class. Okay, so what does this material contain? So this material contains concepts, which we will be running through one by one. We'll be adding points to it. We'll be understanding stuff. So that is the first thing, which is your conceptual theory. Okay, all of those theory concepts which you will be applying in problems. Okay, next, I have given you a theory question bank. So a lot of students have this phobia when it comes to costing, because the syllabus is vast. Costing comes for 100 marks, and we have problems and we have theory, correct, in as part of our syllabus. So now students come and ask me, ma'am, what is the theory that we need to study? Okay, so now that analysis of what questions we need to study, what theory we need to study, that we will do on the last day. Okay, but from all this discussion, it is imperative that we need to study theory. Okay, suppose you get stuck in your practical question, then it is the theory question which will save you. Correct? So of course we need to study theory. We cannot completely ignore it. So what I have done is, from the last 5 attempts, okay, whether it is your past examination papers, or it is your RTPs, or it is your MTPs, or it is your questions for practice. So there are certain questions for practice given by ICI. Okay, all these I have compiled for how many attempts? Last 5 attempts. And I have put them in this particular theory question bank. Okay, so you can quickly run through these questions at the time of your revision. Is it okay, guys? So that is the second part of this particular material. Then the third part of the material, of course, that would be our question bank. So all the questions that we are going to be solving in class. So we will try to solve each and every question in class. Of course, apart from the RTP questions, which you would have to put efforts at home. Okay. So I would want you to get the RTP for this particular examination on the last day. Okay, so bring the question paper with you. Okay, so that we can read, glance through it, and start solving the questions depending on whatever is left. Whatever is solved, I'm going to give you the videos. Whatever we have not solved, we're going to solve it in class together. Is that clear? So in this particular session, you will be done with entire revision of costing, and you would have completed your RTP also. Next, to make your life a little more easy, I have also included a formula summary. So from each chapter in costing, whatever formula that you will be using, I've put all of that together in one place. So that is the 4th section of this particular book. Okay, and apart from that, I've given you some sample charts, okay, which we will be using while we are running through the syllabus. So these charts that I've included here are from the chapter non-integrated accounting or integrated accounting. Okay, your cost accounting systems. From that chapter, I've included some charts here. These are sample charts. They are colored, and they are from the book that I launched very recently called as LMRC. Okay, so this LMRC looks something like this. Okay, so this is called as the last minute revision charts. Okay, so from every chapter, everything that is important, 100% coverage has been put into this LMRC. So what I've done is I've given you a few sample charts in our Costopedia Fast Track book that you all have, because we are going to be using that in this class. Okay, if anybody is interested in buying this apart from taking this particular session, you're free to do so. You can talk to Sanjana or Ritu in the office. Guys, is it okay? So we are going to be covering all these things in this particular session. Now coming to the next important thing. Now some of you may ask, ma'am, is this for old syllabus or new syllabus? Well, it is for both. So we are going to be doing all concepts for the old syllabus as well as for the new syllabus. Actually speaking, in this particular paper, there aren't too many differences between the old syllabus and the new syllabus. It is more or less the same. There are just 3 differences. Okay, just 3 differences. What are those 3 differences? First, chapter 1, cost sheet. So cost sheet is different between the old syllabus and the new syllabus. Now, the old syllabus guys, you are anyway going to study what the new syllabus guys are going to study. Okay. By the way, how many old syllabus here? Okay, great. So you are anyway going to study what the new syllabus guys are going to study. So no tension. The new syllabus guys, you are going to study the cost sheet in the old syllabus and in the new syllabus. Okay, I'll tell you why later. So for the new syllabus, you have to do a little extra work. So you have to study what the old syllabus guys are going to study and what is there in new syllabus. Not too many differences, nothing to worry about, very, very simple. Is that okay, everyone? So that is the first point of difference. Second point of difference. Contract costing. Now in one place, the new syllabus guys had to work extra. How much extra? Just this much extra. So God has been very grateful. So because you are working little bit extra, the old syllabus guys now have to work a little bit extra to match your pace. Correct? So this particular chapter has been made very, very simple for the new syllabus guys. Okay, but for the old syllabus guys, whatever was in this chapter remains. In the new syllabus guys, this has been removed. Okay, we will see what that is when we come to contract costing. I am just telling you what the differences are, that's all. Okay, so that is difference number 2. So again here, old syllabus needs to work a little harder than the new syllabus. And difference number 3, a new chapter has been added in this particular paper, which is ABC, activity based costing, which is part of only the new syllabus. So the old syllabus guys don't have to study ABC at all. However, if you're interested, you want to learn, I'm not sure at this juncture how many of you all will be interested in wanting to learn something new. So if you want to learn, you can stay back just in case the institute gives a bouncer question in the examination. But this per se is not applicable to the old syllabus students. So one thing here for the new syllabus guys, one thing here for the new syllabus guys, balances what is there in contract costing for the old syllabus guys. So the institute has done this particular work properly. That's it. This is the only difference between the old syllabus and the new syllabus. So everything will be covered for both. So you don't have to worry at all. Guys, is it okay? Okay. Now, coming to the plan. So what I usually do is, we have 14 chapters, right, in this particular paper. So what I do is I divide these 14 chapters into 3 parts. Okay, so part 1, cost sheet, material, labor, overheads, integrated and non-integrated. This is your part 1. Okay, all the concepts that you study in part 1 are interlinked. What you study in material, labor, overheads, you will be applying in cost sheet. What you study in 1, 2, 3, 4, you will be applying in chapter 5. Okay, so they are all interlinked. So we will study this together as one chunk. Okay, next, part 2. So this is categorized under basics. Okay, next, part 2. What is this part 2? Part 2 consists of methods of costing. Okay, which is your job and batch, contract. So this is 6, this is 7, this is 8. 8 will be process, 9 will be JPBP, 10 will be service. So all these are your methods of costing and consequently the chapter numbers. So this I will comprise as part 2. And then we have part 3. Nothing but the techniques of costing. Okay, so that is standard costing, everyone's favorite chapter. Next, marginal costing. Next, budgetary control. And the new chapter which has been added is ABC. For the old syllabus, this won't be there. So you will have 13 chapters. The new syllabus guys will have 14 chapters. So now what is our plan going to look like? Today, day 1, we will be only able to complete these 2 chapters. So this is day 1. Why? Because these 2 chapters are heavy duty. We have to introduce costing, correct, understand so many new concepts, solve so many problems. Okay, lots of concepts in both the chapters, correct. Next, the remaining 2 chapters, the remaining 3 chapters, we will finish tomorrow, day 2. This is the budget that I'm giving you, the plan. Depending on our speed, your understanding, things can change. Okay, so then we usually in these chapters, this is what we do, right? We fix a budget, then we check the actual, then we see where we have gone wrong, check for the deviations, take corrective action. So similarly, I'm giving you the budget. Then we will see at the end of each day what has our actual performance been like. And then we will take corrective action depending on the same. Okay, so day 1, day 2. This entire thing we will finish in day 3. This will be day 4. We still have day 5. So what do we do in day 5? Chill? No. Buffer. Corrective action. Right? If we don't finish the plan like the way we are supposed to finish, then things move on to day 5 plus RTPs, right? Then we need to do some question paper analysis. Okay, I need to give you some tips on how to, proceed when it comes to your costing paper and generally about the examination. So all of those things will be tackled on day 5, the miscellaneous. Okay, so this is how our plan looks. Is this okay, everyone? Anybody wants to copy this? No? So shall we proceed? Okay. So this is a small introduction of what this crash course looks like and about how we are going to be approaching it. So now we will move on to the first chapter, which is the cost sheet basics. Okay, so now in this particular chapter, the highlight is the cost sheet. Okay, without understanding the cost sheet, we cannot progress at all in costing. Okay, this is the Bible to costing, correct? So first we need to understand what this cost sheet shows us, okay, and how are we supposed to prepare the cost sheet. So can you tell me what the cost sheet shows us? The cost of what? The product, correct? So now I am manufacturing a product. I want to find out what is the total cost associated with manufacturing that particular product. So this particular cost sheet that I'm going to prepare will show me the cost which is associated with that product. So cost sheet shows the cost. But why do I want the cost? to fix the selling price. I need the cost so that I can fix my selling price. And once my selling price is fixed, the difference between the selling price and the cost will give me what? It gives me my profit. So cost sheet will show me how much profit am I making by selling a given product. That is why this cost sheet is very, very important. So cost sheet is nothing but a quantitative statement showing the costs which are incurred in manufacturing a product or rendering a service. Very, very simple. Okay, and I need my costs so that I can fix my selling price, and I need to fix my selling price because the product will be sold at that particular price in the market, and along with that I also need to know how much profit I am making. Okay, so this cost sheet, the entire structure of my cost sheet, okay, comes from one particular classification. Okay, what is that classification? So if you come to your theory part, the conceptual theory, page number 4. Page number 4. So do you see that? Elements of cost. Page number 4, elements of cost. So costs can be classified on the basis of elements. Okay, so how is that classification? Material cost, labor cost, other expenses. So when you're manufacturing a product, the first visible cost of that product is what? The raw material, correct? When I show you this calculator, what cost has been incurred in manufacturing this calculator? The first thing that will come to your mind, ma'am, this plastic. What is this? Raw material. Yes or no? So, when you classify costs on the basis of elements, the first element to cost is material. Now, obviously, that material would not have come on its own, stuck together. Not possible, right? There's no witchcraft and wizardry in costing. So, how was this material put together in the form of this calculator? There was labor, there was human effort, correct? Even if the calculator was manufactured in the machine will not operate on its own. You need people to operate the machine. So whatever said and done, the calculator has become a product because of human efforts, and that is nothing but labor. So the second element of cost is labor. And other than material and labor, whatever expenses were incurred is my other expenses. Okay, so on the basis of elements, cost can be classified into material, labor, and other expenses. Now, I have classified my cost on the basis of elements. Each element can be further subdivided into direct costs and indirect costs. Guys, what do you mean by direct costs? Very, very important. Direct costs are those costs which can be identified on a per unit basis. Please write. Direct costs are those costs which can be identified on a per unit basis. On a per unit basis. So depending on the number of units, I can identify how much cost would have gone into the manufacture of that particular product. So simple example again, calculator. Now the calculator consists of one display. How much? One display, this one, correct? Now, if I tell you, I have manufactured 10 calculators, how many displays would I have required? So, because I can identify this particular cost on a per unit basis, that is in 1 unit, how much of this particular cost will be incurred. these costs are known as direct costs. Okay, so if I'm manufacturing 5 calculators, how many displays would I need? 5. If I'm manufacturing 100 calculators, how many displays would I need? 100. So that is a direct cost. But if I tell you the same thing with respect to rent, can you tell me how much rent I would have incurred in manufacturing this calculator? Not possible. It's not possible. You cannot identify that rent on a per unit basis. You can only identify it as a total. Correct? It cannot be identified on a per unit basis. So such costs are known as indirect costs. So direct costs are those costs which can be identified on a per unit basis. Write down. Indirect costs are those costs which cannot be identified on a per unit basis. On a per unit basis. So see here, suppose the rent in which the rent of the room where this particular calculator was manufactured, let's say if it was 1000 rupees, okay, and this time I have manufactured 10 calculators. So what is the rent per calculator? What is the rent per calculator? Total is 1000. I have manufactured 10 calculators. So what is the rent per calculator? 100 rupees. How did I get 100? 1000 divided by 10. Okay, so this time I manufactured 10 calculators. Let's say in the next period, I manufacture 20 calculators. Now what is the cost per calculator? So that is 50 how? 1000 divided by 20. So you cannot identify it on a per unit basis. It's not possible. But display will be the same only, no? You can identify the cost associated with the display depending on how many calculators you manufactured. So direct costs are those costs which can be identified on a per unit basis. Indirect costs are those costs which cannot be identified on a per unit basis. So whatever classification of cost we saw, what on the basis of elements, material, labor and other expenses can be further subdivided into direct and indirect costs. So if you see here, materials, direct material, indirect materials. Those materials which can be directly identified with the product are direct materials. Those materials which cannot be directly identified are indirect materials. Similarly, you have labor. Those wages which can be identified directly or on a per unit basis of the product are my direct wages or direct labor. And those wages which cannot be directly identified on a per unit basis, they are known as indirect labor. Okay, so simple examples. Could you all tell me what example comes to your mind when it comes to direct material? Calculator, calculator display, these buttons, correct? The battery, correct? All of these are direct materials because they can be identified on a per unit basis. But in manufacturing the calculator, say there was some oil which was used, some machine oil or some phenyl which was used to clean the counter where all of this was put together. Can you identify that on a per unit basis? No. So that becomes your indirect material. Similarly, you have direct wages. All those workers who were paid because of the number of calculators that were manufactured by them, those are my direct laborers. So direct labor. But the accountant who's sitting in the factory or the supervisor of the factory who's supervising and managing the entire factory, he was not directly involved in manufacturing this particular calculator. So his salary cannot be traced to the number of units which were manufactured. So that is your indirect labor. So this is your direct material, direct labor, indirect labor. Now, other than material and labor, what did we say? That everything else comes under other expenses, correct? So now other expenses can be further classified into direct expenses and indirect expenses. So guys, direct expenses, again, those expenses which can be directly identified with per unit of the product. Now, what are the examples? One example which comes to my mind is royalty. Royalty. Now, suppose, let's say, you want to sell this particular calculator. Let's say, which brand is this? This is Casio. Okay. So, Casio. Okay. Now, Casio is a well-known brand, and everybody who would want to buy a calculator would go in to buy the Casio calculator. So now you decide that, okay, I'm going to sell Casio calculators. I'm not going to manufacture my own calculator. Nobody is going to buy. So what I'm going to do is I'm going to sell Casio calculators. So now when you go to the CEO of the Casio calculator saying, I want to sell Casio calculator, can I sell? So the CEO says, sure, you can sell. If you already have manufactured your own calculators, I'll give you the Casio sticker. You put it on that and you sell it as a Casio calculator. But will the CEO allow you to do that just like that? So the CEO says, I will allow you to do this, but for every calculator that you are selling in the market, you need to pay me a cut. Okay, so let's say this calculator sold for 100 rupees. The CEO tells you, give me 10 rupees for every calculator that you sell in the market. Why? Because the CEO is allowing you to use his brand, which is the Casio brand. Though you have manufactured this calculator, you are putting the Casio sticker on this calculator and selling it as a Casio calculator. Yes or no? So there you're using the Casio brand. So the CEO is telling you that you need to pay me 10 rupees for every unit sold. Can you not identify that on a per unit basis? So if you've sold 10 calculators, how much money do you need to pay to the CEO? 10 rupees per calculator, so 100 rupees. If you sell 2 calculators, how much money do you need to pay? 20 rupees. So this can be identified on a per unit basis. So that's why this is a direct expense. And other expenses which cannot be identified on a per unit basis, which are neither material nor labor, will come under indirect expenses. Now, all your direct expenses put together, all directs, that is your direct material plus direct labor plus direct expenses, that is other than material and labor, what does it give you? It gives you something called as prime cost. So, in other words, can I say direct expenses plus indirect expenses gives me total cost? So if I put all my directs together, to that I also add all my indirects, I will get my total cost. Guys, agreed? Yes. Now, I know all my direct expenses will be direct material plus direct labor plus direct other expenses. What does this give me? Prime cost. This gives me something called as prime cost. To this, I add my indirect expenses. So this will give me my total cost. Okay, we are slowly deriving the cost sheet now. So how did we start off? We know that direct plus indirect gives me total. Direct I expanded into direct material plus labor plus expenses, which gave me prime cost. To that I'm adding my indirect expenses. I don't know anything about indirect expenses as of now. Okay, so now we are going to understand what are these indirect expenses. So guys, indirect expenses. Okay, indirect expenses, I'm talking about all indirect expenses. Indirect material, indirect labor, indirect other expenses. The word indirect, the minute that comes, okay, you should know that the other name given to this particular word indirect is overheads. Is overheads. Guys, correct? So what I want you to do is, have you all copied all this? Have you all copied? Please copy. I'm giving you extra things in the middle which are not there in the book. So I'm expecting you all to make a note of it wherever possible. So keep listening to me and keep writing it in the book. So purposely I didn't put it there because I want you all to write it as and when the class is going on. The more you write, the more it will stay in your mind. So please write. So have you all written the difference between direct costs and indirect costs? Yes. So what I want you to do is connect all these direct costs and say prime cost and say prime cost. Connect all these indirect costs and call it overheads. All the indirect costs and call them overheads. Guys, a lot of students have a misconception that only this indirect expenses are overheads. No, all indirects, even indirect material, even indirect labor, and other than material and labor, other expenses which are indirect, everything put together is overheads. So all indirect expenses, all, please note, are my overheads. So remember I gave you the example of rent that will come here. It is neither material nor labor. So it is other expense. And it cannot be directly identified. So it is indirect expense. Guys, correct? Everyone? Now, all indirect expenses put together, that is indirect material, labor and other expenses, gives me overheads. Now, overheads can be further classified into the following. What? First, production overheads. Production overheads, also known as factory overheads. Also known as factory overheads, also known as works overheads. So this has three names: production overheads, factory overheads, works overheads. So overheads are further classified into three types. The first type is factory overheads, also known as production overheads, also known as works overheads. So why are they so called? They are so called because all these expenses are first of all indirect. Okay, that is, they are not directly identifiable with the product. Okay, and they are called as factory overheads because they are incurred in the factory. So anything which is indirect and incurred in the factory will be your factory overheads. So power, depreciation on machinery, are these directly associated with the product? No, you cannot tell in one unit what was the cost incurred when it came to depreciation on machinery. Not possible. It's like rent. Correct? So factory rent, power, heat and light, your salaries of factory supervisor, you cannot tell. Yes or no? So all these expenses are first of all indirect, which means they are overheads. So that we have established. And once we know that they are overheads, which overhead are they? They are factory overheads. Why? Because they are incurred in the factory. That's why they are called as factory overheads. Yes or no? So that is the first classification of overheads. Second classification of overheads, administration overheads. So all the overheads which are incurred in the office are called as office overheads or administration overheads. So the other name for administration overheads is also office overheads. So depreciation on office furniture, that is first of all indirect, and it is incurred in the office, so it will be part of AOH, not part of FOH. So the overheads are so classified depending on where they are incurred. For what purpose are they incurred? So if they are incurred in the factory, factory overheads. If they are incurred in the office, office overheads. And the last classification, selling and distribution overheads. So anything which is incurred towards selling or distribution of the product will come under selling and distribution overheads. So usually there are two categories, selling overheads, distribution overheads, but we club it together and we write it as selling and distribution overheads. So any commission which is paid to the salesman, why are the salesmen there? So that they can sell the product. So that is related to selling and distribution overheads. They are not directly associated with the product, hence they are indirect. So they come under overheads. And which overhead? Selling and distribution overheads. Or let's say depreciation on delivery vans. Where will we take this? Selling and distribution overheads. Why? First of all, depreciation not direct. So it is indirect, which means they are overheads. Which overheads? FOH? No, they are not incurred in the factory. AOH? No, they are not incurred in the office. But they are incurred for the distribution, delivery of the product. So it is part of selling and distribution overheads. Guys, okay? So very clear thought process. Go step by step, that's all. Yes or no? So three kinds of overheads. Factory overheads incurred in the factory. Office overheads incurred in the office, also known as administrative overheads. Selling and distribution overheads which are incurred towards selling and distribution. So now going back to my cost sheet, I had left indirect expenses as it is. Now shall I expand it? So let's see what we get. So I will do it again here. So direct material, direct labor, direct expense, I get prime cost. Now I will not write indirect expenses because now I know what is part of that indirect expenses, correct? So first amongst those three overheads, which one will come? Factory overheads, because the product has to be manufactured first. Only then we can move on to what is happening in other places. So first indirect expense will be my factory overheads or factory expenses, which are my indirect expenses. The minute overhead comes, we know it is indirect, correct? What do we get? When we add factory overheads to prime cost, we get something called as factory cost. Factory cost, correct? Now factory overheads are also known as works overheads, right? So this is also known as works cost. This is also known as works cost. So out of the three overheads, I have taken one. What is remaining? AOH and SNDOH. Which will come next? AOH, office overheads. So I add my AOH to this. What do I get? Cost of production. Cost of production. Now what is left? The last overhead. Selling and distribution overheads. What do I get? Total cost or cost of sales. We are still at a very basic level. This is a very, small version of the cost sheet. The actual cost sheet which we are going to be using for problems. We are going to get there, don't worry. Okay, so to this what do? I add profit and I get sales. So now I've expanded my directs into whatever they move into. I've expanded my indirects into whatever they move into. And I've got my basic version of the cost sheet. But is this the full version of the cost sheet? No, it's quite complicated than that. Why? Because of the presence of stocks. Now stocks could be at three levels. First, we are using direct material, which is my raw material. Now there could be an opening stock of raw material. What is opening stock, guys? Opening stock is that stock which was left unused in the previous period. Correct? So that means it was the previous period's closing stock. Because it was left unused in the previous period, we have brought it to this period. That okay, I didn't use it in the previous period, let me use it in this period. So that is my opening stock. So I could have some unused stock of raw material which is available for me to use in this particular period. That is opening stock. What is closing stock? The unused stock of raw material in this period. So I had some unused stock from the previous period. So I start manufacturing. So I use that first. Then I purchase more. Then I realize, oh, why did I purchase so much? It's not required. So this much is left now, which I'm not going to use. So that this much which is left is my closing stock in this particular period. Correct? Which will become the opening stock to the next period. Yes or no? So I could have an opening stock, closing stock for raw material. That is stage 1. Stage 2. I could have opening stock and closing stock of WIP, work in progress. What does that mean? It means I've started manufacturing the finished product, but I didn't complete it. Guys, it's possible. It's possible. It's not necessary that everybody has to finish the product. We cannot be perfect, right? It's possible that I may have started, completed like 40%, 50% and the period got over. So that is what? Work in progress. So there's a possibility I have an opening work in progress. What is opening work in progress? Coming in from the previous period. So in the previous period, I finished my product only to a certain extent. It is left now. In this period, what am I going to do first? Finish that. That is opening WIP. And what is closing WIP? What happens in this period? I have finished only to this extent and left it there. Unfinished. That will go to the next period and get completed. Correct? So opening and closing WIP. And after that, here I will have my opening stock and closing stock of finished goods. So there could be a scenario where the finished goods that I had manufactured in the previous period are still there. I didn't sell it. I couldn't sell it. So they're still lying in my go down. I can sell it in this period. Yes or no? So that is my opening stock of finished goods. And which I'm going to sell in this particular period. And closing stock of finished goods is also the same thing. Which is left. I did not sell. So I will sell it in the next period. Guys, correct? So there could be stocks. Presence of stocks at these 3 stages, at raw material stage, at WIP stage, at finished goods stage. So now when there are stocks, what do we do? Okay, so for that I would want you to come to page number 7. Page number 7, point number 7. Guys, page number 7, point number 7. 7 only, no? Point number? Yes. So see there, we have stock divided into 3 types. We already saw raw material, WIP, finished goods, right? So raw material, opening stock, closing stock, WIP, opening stock, closing stock, right? Guys, now you can put a bracket around this. These 4 stocks are not going to trouble you at all. Why? Because it will be given to you in the problem. You don't have to do anything when it comes to opening, closing of raw material, opening, closing of WIP. So please write no computation required. As it will be given in the problem. So opening stock of raw material, closing stock of raw material, opening stock of WIP, closing stock of WIP, no problem, absolutely. Then what is the problem? Finished goods. That's also not a big problem, it's a small problem. But comparatively, it's a problem. Okay, so now finished goods, opening stock and closing stock. Now if finished goods come into the picture, where there's an opening stock and there's a closing stock, then what do you do? So we will see how to value this opening stock and closing stock. Usually what they will do in the problem is, they will give you the units of opening stock and closing stock. Okay, but cost sheet is showing cost, right? Cost sheet is showing cost. What are you putting in the column after you write material, labor, prime cost? What is that? That is cost. But they will give you units. So now how do you convert units to cost? Now you will have to figure out at what value to value opening stock and closing stock. Okay, so this is a rule. Okay, follow it. Thumb hand rule. Okay, so your opening stock, okay, will always be valued at the previous period's cost of production. What? Previous periods. Why previous periods? It is coming from the previous period. No. This opening stock of finished goods was actually finished. Finished goods, which means they are manufactured goods. They were manufactured in the previous period. So if they are manufactured in the previous period, the cost or the value of these goods should also be as per the previous period. Otherwise it's not fair. Otherwise it's stupid. Correct? So this should be valued at the cost of production of the previous period. Okay. What about closing stock? Closing stock is current period stock. Yes or no? By default we are following FIFO. By default we are following FIFO. What is FIFO? First in, first out. Which means opening stock came, I manufactured, I sold. What is left is what I manufactured in this period. FIFO by default. Yes or no? So closing stock is left from which period stock? It is left from the current period stock which was manufactured in the current period. So closing stock should be valued at the current period's cost of production. Opening stock came from the previous period. It should be valued at the previous period's cost of production. Closing stock should be valued at the current period's cost of production, because we are following FIFO, and as per FIFO, what is left in closing stock was what was manufactured in this period. If it is manufactured in this period, then obviously it should be valued at this period's cost of production. Guys, simple. So very simple. Opening stock, previous period's cost of production. Closing stock, current period's cost of production. But they make our life confusing sometimes. How? They don't give this. Now to value opening stock, we need previous period's cost of production. Current period's cost of production, we will find out. How? By putting the cost sheet in place. That we will get. So this is no tension at all. But this, though, they have to give us. No, they have to give us some information. They have to give us some clue. They don't give. Then what do? If they have not given it, then we cannot do anything. If not given, value using current period's cost of production. Though this is wrong, because this period's cost of production and previous period's cost of production is not going to be the same. It is not logical at all. But if they have not given, we don't have a choice, right? So what will we do? We will value opening stock also using current period's cost of production, and write a note that that opening stock should be valued at the previous period's cost of production. It is not furnished to us in the problem. Hence, opening stock was valued using current period's cost of production. So you will write this note. Guys, okay? So in costing, we have to be very careful. Whatever assumptions you are making, always write a note to that effect. Always. Presentation is of utmost importance. You may know everything in the subject, but if you don't know how to present your paper, it's going to be problematic. And 3 hours, lengthy paper, mind you. So you need to write each and everything. Otherwise, it's going to be very, very difficult. So whenever you are making an assumption, please write a note. Always. Thumb rule. Okay? So now that we know about stocks. So raw material, WIP, no tension. Finished goods we've already figured out. Now how are these stocks placed in the cost sheet? So let's see. So let's start. So you have first what comes? Direct material. So stocks will be adjusted here, correct? Now first thing that we need to know is when we put the cost sheet in place, if we have opening and closing stock, and if the question has given us number of units, then we cannot have just one column. So then we will have particulars, we will have units, we will have per unit, we will have total. Why will we have units and per unit? Because they have given us opening and closing stock units. Why do we need per unit? Because we need to value that opening and closing stock units. So we need to know what is that per unit cost of production. So I have to put that column also. Only if I have that I can determine what it is. Yes or no? So if opening and closing stock value has been given, then no need to put this, not required. You directly put particulars, total and put, because they've given you the value. You don't have to do any valuation. But if they have given you units, then what do we have to do? Then we have to put units column, per unit column, total column. Okay, so how do we start? Direct material. Correct? But direct material has opening stock of raw material and closing stock of raw material. So how do I adjust that? First of all, what part of material should come in the cost sheet? Obviously, cost sheet is showing the products manufactured, which means the raw material that will go into that product manufactured will be the raw material consumed. Yes or no? Will it be purchased? No, it will be raw material consumed, because that is what is going into the manufacture of my product. And cost sheet is showing me what was the total cost associated with the manufacturing of that particular product. So raw material consumed will come. Everybody agrees. So how do I start off? I have opening stock also, I have closing stock also. So what do I do? How will I get raw material consumed? Opening stock of raw material which came in from the previous period, plus I purchased some, so plus purchases, correct, minus closing stock because I did not use this raw material, gives me what? Raw material consumed. Raw material consumed. Correct? What units will you put here? What units will you put here? Your production units. Always, cost sheet always starts with production units. This much raw material was consumed to manufacture these many units. So always production units. Until I tell you to change the production units, do not change the production units. The cost sheet always starts at production units. Why? Because the cost sheet is showing you the cost of the product manufactured. Manufactured is what? Production. Yes or no? Now to this, what do I do? Direct wages? Yes or no? Direct wages plus any sort of other direct expenses which may have given in the problem gives me what? Gives me prime cost. Again, what units? Production units. These were the direct costs incurred in manufacturing these many number of units. Yes or no? So I'm done with my direct expenses. Now what will start? Indirect expenses. Which expense will come first? Factory overheads or production overheads or works overheads. So let's say production overheads. Production overheads. What units? Production units. Have I asked you to change them? No. So production units. That means these many overheads were incurred. Production overheads were incurred for producing these many units. That's all. So production units, your total cost till here, and per unit, how will you calculate? Total divided by number of units. That's it. So what does this give you? Gross works cost. Gross works cost. Now the WIP, opening stock of WIP and closing stock of WIP will get adjusted where? It will get adjusted with works cost because it is in the factory. You still have to complete those units and those units will be completed in the factory itself, correct? So till here gross works cost, but I have to adjust my opening and closing stock of WIP. So plus opening stock of WIP minus closing stock of WIP. Guys, correct? So what do I get? Net works cost. Net works cost. Correct? What number of units? Same production units. You will get your cost here. Per unit cost, how will you calculate? Total cost by total number of units. All of us are on the same page? Yes. So we are done with adjustment of one overhead, which is factory overhead. We are done with adjustment of two kinds of stocks. One is for raw material, one is for WIP. Now what do? I add administration overheads. So plus admin overheads. Guys, okay? Admin overheads. So what does this give me? Cost of production. Which units? Production units. This will give me cost per unit. I can easily calculate. Guys, correct? Nothing has changed till now. Now I have opening stock of finished goods and closing stock of finished goods. Now I will adjust that. Yes or no? So what? Opening stock of finished goods. So add opening stock of finished goods. Guys, now units will change, no? Stock units will come here. So to production units, I'm going to add what was already completed from the previous period. Yes or no? What per unit will you use here? What? Previous period's cost of production. So that they have to give in the problem. So you will get the per unit cost. Total units you have, per unit cost you have, total units into per unit cost will give you total cost here. Yes or no? So this is called as what? Total cost of available goods. They have asked this question in one problem. What is this? So when you add your production units to your opening stock of finished goods, you get this particular thing. We will be solving that particular problem in class. Okay, it's very, very important. When you see that, you'll be like, what is this? I've never come across this. So one extra classification in your cost sheet. Okay, so again, what will I do here? Production units plus opening stock, I will add. And cost also, I will add. Per unit, how will I calculate? Total cost divided by total number of units. Guys, yes or no? Then, minus closing stock of finished goods. So, closing stock of finished goods are those goods which have not sold in this particular period, right? So, I had opening stock which I used to sell. I produced some goods which I used to sell, but all of those goods were not sold. Some were left. So, that is my closing stock, correct? So, again, I will have closing stock units, but in minus. Yes or no? But the question will only give me units. How do I get the value? Previous period's cost of production or this period's cost of production? This period's cost of production. From where will I get this period's cost of production? See here. You calculated, no? Cost of production per unit. You would have already calculated in the cost sheet. Here. Yes or no? So you will understand this better once we solve the problem. But now just try to understand what is happening. So cost of production per unit we've already calculated. This cost we will use to value my closing stock. Yes or no? So I will get the value of closing stock. Guys, correct? So what is this called? Resultant figure. Cost goods sold. Cost of goods sold. Now you tell me what units will be left. Sales units. I started with production. I added opening. I minused closing. What am I left with? Sales units. Now the units changed. So when we're talking about cost of goods sold, my units have changed to sales units because I adjusted opening stock and closing stock. So again I will have cost here. Per unit can be easily calculated. How? Cost divided by sales units. I will get my cost of goods sold per unit. Now, I have adjusted all stocks. I have adjusted all overheads except one. Which is that? Selling and distribution overheads. So, selling and distribution overheads. Again, I will adjust here and I will get what? Cost of sales. Cost of sales. So guys, cost of sales, when I get, what units will I get here? Sales units. I have not changed anything. From production I changed to sales, and that's it. It remains at sales. Cost of sales, as the name suggests, whatever you're selling, what is the cost associated with that? So naturally the number of units that should come should be your sales units. Yes or no? You'll get the cost. You will get your per unit. Your cost of sales is also your total cost. This is why we were doing this cost sheet. Because to understand what is the total cost associated with manufacturing the product. Now on this, I will add profit. So naturally profit, when you are calculating profit, will you calculate profit on production units or will you calculate profit on sales units? Sales units. No, otherwise I can say, I have manufactured 100 units, I have not sold anything, but since I manufactured 100 units, I am making a profit. Is that possible? It's not possible, right? Only if I sell it to another party, then I can make profit out of it. So profit is always on sales units, not on production units. So you should convert your production to sales units. So when you are calculating profit here, this figure should be sales units only. It cannot be production units. Yes or no? So I will add my profit per unit. If given in the problem, sometimes they give you the sales value. Okay, profit is usually the balancing figure. Sometimes they may give you the profit per unit. So if they give you profit per unit, what will you do? You will write it here into sales units. You will get your total profit. Guys, okay. If it is balancing figure, then you leave this space. You put sales here, then sales minus cost will give you profit. Whatever be the case. Yes or no? So I've got my profit, I've got my sales. So sales units, sales value and selling price per unit is what I will get in the middle. So see from where I started from production and I landed to sales. So this is the full version of your cost sheet. Now which cost sheet? This is your old syllabus. Old syllabus cost sheet. So obviously it means that in the new syllabus we are going to learn something new. There are going to be some changes, some deviations in this particular cost sheet. So now the old syllabus, guys, for you it's just this much. The new syllabus, guys, it's this plus something more. You need to know both. The new syllabus, guys, need to know both. Old, what is happening in the old and in the new. Because the new syllabus cost sheet, first of all, you will gain clarity of what that is only if you know the old syllabus cost sheet, number one. Number two, many times the institute has solved problems, though they have prescribed the new syllabus cost sheet, they have solved problems in the old cost sheet method. So you should know both. Depending on what kind of question has come in the examination, you will either use old or new and write a note to that effect. Okay, there are some very, very prominent changes in this cost sheet in the new syllabus. If a question with those changes comes in the exam, then it is a clue to us that we have to solve the question using the new syllabus cost sheet. But if those changes are not coming, then what do? Then we use the old syllabus cost sheet and solve the problem and we'll still write a note. Is that okay? So the new syllabus, guys, should know both. Old syllabus, no tension. You just have one. Everyone, so quickly come to your crash course material. Page number 8. Page number 8. quickly run through it again. So opening stock of raw materials, purchases. Okay, see here, including carriage inwards, transit, insurance, etc. So any kind of expense that you may have incurred while you're purchasing your material should also be added to the value of purchases. Why? Because when we come to material chapter, which is chapter 2, you will study something called as landed cost of materials. Okay, so when we do this, I will remind you that guys, today we are going to do this today only. So in the evening when we do this, I'm going to remind you guys, in the morning we saw this, remember, landed cost of materials. So anything that you have incurred towards materials will get adjusted with the value of materials. So if they've given you any carriage inwards or they've given you any trade discount, what will you do? You will adjust it with the purchase and put it there. Is that okay? Minus closing stock gives you direct materials consumed. We add direct labor, we add direct expenses, we get prime cost. To prime cost, I will add my factory overheads, also known as works overhead, manufacturing overhead, production overhead, whatever the name may be. Add opening work in progress minus closing work in progress gives me factory cost or works cost. Then I add my office overheads or administration overheads, also called as office overheads basically. Any kind of general management expenses, all of those are my office overheads. Administration overheads, I will add that. I will get my cost of production. Now when I've got my cost of production, what am I going to do? Adjust the stocks. Which stocks? Finished goods. So add opening stock of finished goods. When I add only opening stock of finished goods, what do I get? Cost of goods available for sale. That one extra thing that I told you, you should know this guys, because in one of the problems they gave a bouncer. It was related to a missing figure. Basically there were missing figures in the cost sheet and you had to complete the cost sheet. The way this particular question had to be completed was using this particular hint. So if you don't know what this particular figure stands for, you will not be able to complete the cost sheet, because in the problem they had given cost of goods available for sale. So if you don't know what that is, then you will not be able to complete the cost sheet. So a bifurcation here, that is cost of production plus opening stock of finished goods gives me cost of goods available for sale, minus closing stock of finished goods gives me cost of goods sold. I'm going to add my selling and distribution overheads, which are nothing but my marketing expenses and distribution expenses. I get cost of sales. Cost of sales plus profit or loss, as the case may be, I will get my sales. Is this clear to everybody? Okay, so now before we move on to the new cost sheet format, there are some adjustments that I need to ensure that you all are very clear with. Okay, so for that I would want you to come to point number 1, which is page number 4. Page number 4, point number 1. Okay, so treatment of AOH and SNDOH. Now guys, sometimes in some problems, what they do is, if they give you administrative overhead is this, selling and distribution overhead is this, life is easy. You know AOH will come, will get added to your factory cost, you will get your cost of production. Selling and distribution overhead will get added to your cost of goods sold, you will get cost of sales. But the question that they give will look something like this. Administration and selling overhead 3,000. Now what do you do? Should I put it under administration? Should I put it under selling? Confusing, right? So we have a solution to this particular problem. So if they give you an expense like this, what do? Let's assume the question is silent. They have not given anything else. So if the question is silent and they have said administration and selling overhead, where will you take it? You will take it as administration overhead. Why? Because administration is given first. That's how you interpret administration and selling. Because they have given you administration, it means selling is negligible. So major part of that expense is administration. So it will go as part of AOH. But if they say selling and administration, Then where will you keep it? Selling and distribution overhead, because selling and distribution is coming first. That means administration is negligible. So that's why they've clubbed it. They didn't want to show it as a separate head. So you will take it under selling. Okay, this is when the question is silent. Okay, now question is not silent. The question specifies. Okay, so let's see what the question specifies. So the question has given us the expense like this: administration and selling. Okay, and the question also says this expense is a function of production. Now where will you put it? AOH. Why? Do you see which is coming first here? No. That is when the question is silent. So just because AOH is coming first, it doesn't mean you'll put it under AOH. What do you have to see? You have to see what is given here. Function of production. Guys, always remember, AOH is always a function of production. Always a function of production. What do you mean by saying it is a function of production? In our cost sheet, we have 3 columns, right? We have units, we have per unit, we have total cost. Correct? So if I write admin expense here, my total cost will come here. Correct? So when I say it's a function of production, it means to calculate this per unit value, this total cost has to be divided by the production units, not the sales units. That is what I am trying to say when I say that it's a function of production, which means total admin cost will be divided by the production units. So AOH is always a function of production, whereas SNDOH is always a function of sales. Always a function of sales. It means that selling and distribution total expense, which I write in the total column, to calculate per unit, with how many units will I divide it? Sales units, not production units. So selling and distribution expense is always a function of sales. Administrative expense is always a function of production. So now they have given admin and selling expense, but they have said it's a function of production. Don't see which is coming first, which is coming last. What do? Directly AOH, because only AOH is a function of production. Now if they've given us admin and selling expense, function of sales. So though admin is coming first, it doesn't matter. This expense is a function of sales, which means it is to be divided by the sales units. So where will you place it? Selling and distribution overhead. Guys, very intricate. But this is how they confuse us in the exams. We may know, or we may feel that we know it, but actually this is where we lose marks. Very, very intricate stuff. Guys, is it okay? Next, selling and admin overhead. But what have they given? Function of production. So if the question was silent, where would you have placed it? Selling and distribution. Why? Because selling and distribution coming first. But what have they said here? Function of production. Selling expense is never a function of production. So where will you place it? AOH. AOH. And the last one, selling and admin overhead. So if the question was silent, you would have placed it under selling. Correct? But function of sales. So you will still place it under selling. So if the question specifically tells you this is what needs to be done, then you do what the question is telling you to do. But if the question does not say it's a function of sales or a function of production, then what do? Then you see which one is coming first. And if it is coming first, we assume that that is between both the expenses. This one is given more importance. So you place it there. Did you all understand this? So this is adjustment number 1. Now this adjustment will play a major role in your new cost sheet that we will do later. Okay, but it is something to do with this. Okay, so we will see. So this is adjustment number 1. Very, very important. Shall we move on? Next. Okay. Abnormal and normal loss. Now what do you mean by abnormal and normal loss? Guys, normal loss is that loss which was meant to happen. You already knew about it. It is expected. You know that it is going to happen. You're prepared for it. Correct? Abnormal loss, as the name suggests, abnormal. It is irregular. It is unexpected. You never thought it would happen, but it happened. So now if there is normal or abnormal loss, what do you do? Okay, so for that we need to look at some concepts. So let me give you a small example. Okay, let's say we were to buy 10 apples. Okay, these 10 apples were to cost me 100 rupees. So if I ask you guys what is the cost per apple, what will you say? So 100 by 10, which is 10 rupees. Correct? This is what you would tell me, ma'am, the cost per apple is 10 rupees. Now, I know we were to buy 10 apples. I know that, I've ordered it. By the time the apples come, there is a possibility that some apples may get rotten. So usually I'm very used to ordering apples and in this quantity, and I know every time I order, one apple turns out to be rotten. I know that. What is that? Normal loss. Expected. Okay. So I know that one apple will be rotten. Every time this only happens. So I know. It's not something new for me. So now the apples come. I open the crate. And what do I find? I find that 7 apples are good. 7 apples are good. Totally 3 were rotten. Totally 3 were rotten. So my 10 is still not reconciling. Out of 10, 7 were good, which I can sell or which I can eat. 1 I knew will be rotten. So discounted, no problem. What is the remaining balance? What is that figure? 2 apples. So 2 apples were abnormal loss. I didn't expect 3 to go rotten. I expected only 1 to go rotten. So over and above normal, the additional 2 apples which went rotten is my abnormal loss. Now, will the value of per apple remain 10? No. Now it will not remain 10. Why? Because we'll make a story out of this. Okay. These apples start fighting amongst each other. That, no, this 10 rupees I am not going to bear. So abnormal also says, why should I bear? I have become rotten. I am not going to bear this cost. Normal also says, yeah, even I am not going to bear this cost. So now the 7 good apples are like, not fair. I turned out to be good. Just because I'm good, it's not fair that I bear the entire 100 rupees. So now they come to a consensus. Okay. So these 7 good apples say, I have to bear the cost because I'm good. I cannot escape. Okay. But this normal loss apple, no problem, I will bear your cost. Why? Because we always knew from day one that you are going to be rotten. Okay. But abnormal loss apples, your mistake. You became rotten. You should have not become rotten. You bear your own cost. So, this normal loss apple, the cost which was associated with this one apple, how much was it? 10 rupees. This cost will be borne by the good apples and the abnormal loss apples. So, what do we usually say when there's a normal loss? When it comes to normal loss, the cost is borne by the remaining units. Which are the remaining units here? Good units and abnormal loss units. Whereas the abnormal loss units, the abnormal apples, are valued at par with good units. So whatever is the value of good units will be the value of abnormal units. Why? Because good units say, sorry boss, you were supposed to be good. You ended up being abnormal. Now it's your mistake. You bear the punishment for it. I am not going to bear your cost. So now how will this 10 rupees be distributed? Normal losses, I am not going to bear any cost. So this 100 rupees will not go to normal loss for sure. So 100 rupees will be divided between how many apples? 7 plus 2. Or can I say 10 minus 1? Total 10 minus normal. which is nothing but 7 plus 2, remaining units. Yes or no? So what is my new cost now? What is my new cost now? 100 divided by 9, which is what? 11.1. Right? So see, from 10 rupees what happened? Cost shot up. Why? Because those normal apples did not bear the cost. So the cost could not remain 10 rupees per apple. It became 11.11 rupees per apple. So now what happens? Now when we go to the cost sheet, if you have to make the cost sheet for these apples, how will you show the cost? In the cost sheet, which apples will come? Only good units. Abnormal loss units will not come. Why? Because abnormal loss units were not meant to be loss units. They became loss units. So it is not fair for me to transfer abnormal loss to the cost sheet, because if I transfer it to the cost sheet, I am trying to say that that cost is being transferred to my customer. Why should the customer bear the cost for abnormal loss units? They were not meant to happen. Normal loss was meant to happen. That I am transferring. The customer has to bear it, because we always knew that this loss is going to happen. But abnormal loss the customer cannot bear. It's not fair. Yes or no? So this abnormal loss cost cannot be transferred to the cost sheet. So where will it be transferred to? Costing P&L. The company has to bear this particular cost. The customer will not bear this cost. So in the cost sheet, what will the cost be? Cost will be only for 7 apples. So 7 apples into 11.11. How much do you get? So this will go to cost sheet. So in cost sheet, when I transfer this cost to this, I will add my profit and I will show my selling price. Yes or no? But abnormal loss, what will happen? 2 apples were there, no? So how will I value 2 apples? 2 apples will be charged exactly like the way I have charged my good units. They will be valued at par with good units. So 2 apples into 11.11, how much? Yeah, so because of the round off, it will add up to 100. This will go to my costing P&L account. Costing P&L account. So the minute I'm transferring something to costing P&L account, what does it mean? It means the company will bear that cost. So if this is a loss, the company has to bear it. It's not fair to transfer it to my customer. Customer will not bear it. Guys, is it okay? Everybody. So if you come to this particular question here, or sorry, point 3. Come to point 3. Come to point 3. See, abnormal loss to be removed from the cost sheet and transferred to costing P&L account. Correct? Did I transfer the abnormal loss there? No, I transferred it directly to P&L account. But suppose in the question, they have given you abnormal loss as part of the main cost. What will you do? You will remove it and transfer it to costing P&L account. Guys, is it okay? That is what this means. Abnormal loss to be removed from the cost sheet, because abnormal loss cannot be transferred to the customer. It is not fair. The customer should not pay for the abnormal loss. The customer can pay only for the normal loss, not abnormal loss. Also, abnormal loss is fluctuating. Today, 2 apples were rotten. It's abnormal. Tomorrow, something else may be rotten. So, will I keep transferring it every time to the customer? Then the selling price will keep changing. Then your company will get blacklisted. Like imagine if you would go to a shop in the morning and the muffin you're going to buy say muffins, okay? And one muffin would cost 10 rupees. In the evening, if you go and if it costs 11 rupees, how will you feel? In the morning only I bought it for 10 rupees. Now you've made it 11 rupees. How is that possible? So you cannot keep changing your selling price like that. So abnormal loss will never go to the cost sheet. If it is included in the cost sheet, what will you do? Remove it. Clear? Next, sale of abnormal loss to be adjusted from loss and net value to be transferred to costing P&L account. Now let's see what this means. Come back here. Now, same question. 7 units were good, 2 units were abnormal loss units, 1 unit was normal loss unit. Along with that, I'm adding one extra point. Let's say these rotten apples, let's say the rotten apples, okay, they have a scrap value of say 2 rupees. So the rotten apples have a scrap value of 2 rupees. Now what will happen? Now how does the costing change? So let's see. 100 rupees was my total cost which was incurred. Now again the good units will tell that, you know, now they have to bear the cost. Correct? Good units have to bear the cost, but they will tell abnormal loss units, you also bear. You are not supposed to be abnormal first of all. So you and I will bear normal loss, no problem. But the good units will tell normal loss, see boss, I am bearing your cost. Now you will fetch 2 rupees in the market when sold. So you give that to me. I am bearing your cost. So if you are getting 2 rupees, you better give it to me. I cannot let you have it. I am doing something for you, you do something for me. Okay, so what happens? Now this 100 rupees which the good units are going to bear and the abnormal loss units are going to bear, normal loss is going to fetch 2 rupees per unit. So this normal loss is going to give this 2 rupees to the remaining units, which means now the cost will not be 100 rupees. Now the cost will be 100 minus 2 rupees. 1 unit is being sold, so 2 rupees I'm getting. So my new cost is 98 rupees now. And this will be divided between whom? This will be divided between the remaining units, which is what? 7 plus 2 or 10 minus 1. So how much do you get? 98 divided by 9. Okay, let's make this 1. Okay, no, tell me. 98 divided by 9, how much? Calculate. 98. Yes, 10.89. So now the cost is not 10. It is 10.89. But it is definitely lesser than 11.11 because normal loss units gave us their 2 rupees. Yes or no? That reduced the total cost. So now how will the costing look like? So in the cost sheet what will go? Only the good units. 7 apples into 10.89. So how much do you get? Whatever. This will go to my cost sheet. Now abnormal loss units. The value of these abnormal loss units will be 2 apples into 10.89. How much do you get? 10.89 into 2, 21.78. But these are also rotten apples, which means these apples will also fetch 2 rupees in the market. So minus scrap value, which is 2 apples into rupees 2. Obviously the person who's buying these rotten apples from you will not know if it is normal or abnormal for you, no? Rotten means rotten, it will go for 2 rupees. So how much am I getting? 4 rupees. So minus 4, 17.78 rupees. This will go to the net costing P&L account. Guys, did you all understand? Everybody, you want to copy this? Please copy it. Guys, okay? So, please remember, if they have not included abnormal loss in your cost sheet, no problem. Good. You don't do anything. If they've included it, then what do you do? Remove it. Why? Because it will go to your costing P&L account. Okay? So, always remember, thumb rule when it comes to normal and abnormal loss, the cost associated with normal loss units will be borne by the remaining units. Which are the remaining units? Good units and abnormal loss units. Both will bear the cost associated with normal loss units. Second point, abnormal loss units will be valued at par with good units. Okay, and what else have they given here? The second point which we just did, sale of abnormal loss to be adjusted from loss and net value to be transferred to costing P&L account. That's what we did here, right? So this was the value of abnormal loss units. I adjusted the value of abnormal loss units here, and this value will go to costing P&L account. Can good units tell abnormal loss units, you give me this 4 rupees? No, that's not fair, because here good units are only bearing the cost associated with normal loss units. That is why normal loss units is giving that scrap value to the good units. But when abnormal loss unit ka value is not borne by good units, then good units cannot ask for their scrap value also. So good units cannot say give me 4 rupees. That's not fair. So if I'm doing something for you, you do something for me. If I'm not doing something for you, you don't do anything for me. So this 4 rupees will completely belong to abnormal loss units. So 21, so now abnormal loss units have no choice. They have to be valued exactly like the way good units are valued, which is 21.78 for 2 apples minus 4 rupees, which the good units, which the abnormal units are getting. So the full 4 rupees belongs to abnormal loss units. The balance goes to costing P&L account, which will hamper the profitability of the organization. It cannot go to cost sheet. Is it okay? Shall we move on? Okay, next. Cost of normal loss to be borne by good units. Please add. And abnormal loss units, if any. If any. In our problem, abnormal loss units were there. But suppose they were not there, then it will be borne by good units. Next, scrap arising from normal loss units to be deducted from total cost and net cost to be borne by good units and abnormal loss units, if any. Correct? We've already done this. You can also add one more point. Abnormal loss units valued at par with good units. Abnormal loss units valued at par with good units. Guys, tired? Better not be. Can you please? Shall we move on? Next part. Okay. Come to point number 4. Expenses incomes not considered in cost accounting. Now guys, there is a huge difference between cost accounting and financial accounting. Correct? Your accounts, your subject, accounts and advance accounts. Obviously that is different from costing. If it was not different, then why would you have 2 different subjects? Correct? So if you look at both the subjects, financial accounting is more like a postmortem. Okay, the period gets over, all the expenses and incomes are there, and you just need to report it. Correct? But in cost accounting, that's not what we are doing. In cost accounting, we go deep into the manufacturing operations. We try to establish how to control costs, how to reduce costs, what needs to be done overall. Okay, we go deep into the manufacturing operations. So there is a huge difference between cost accounting and financial accounting. Now, a cost accounting or a financial accounting would simply tell you that, 10,000 rupees is the overall profit. But a cost accounting would essentially tell you product A gives me 3,000 profit. Product B gives me, 12,000 profit, and product C is giving me a loss of 2,000. That's why overall there is a profit of 10,000. So now your eyes open. Oh my God, product C is giving me a loss. Now what do? You figure out, why is there a loss? Is my cost very high? Am I not selling it at the right price? What do? I need to figure out. Correct? That is not going to be helpful when it comes to financial accounting, because financial accounting gives you other aspects. So obviously both subjects are very, very different. So there are certain things that are given to you in the problem, okay, and they do not form part of your cost sheet. So if this expense were to come in your cost sheet, what do? You simply keep it outside the purview of your cost sheet and you write a note saying this is a non-cost item, hence it is ignored. So that is what we are going to see in point 4. So what is that? Expenses or incomes not considered in cost accounting. What are they? Purely financial charges. This is taken care of in financial accounting, so we don't need it to come in a cost accounting. Remember, cost accounting ends once your product is manufactured and sold. Once you sell off the product, you have got your operating profit. After that, cost accounting is over. Then financial accounting comes into the picture. So after that, whatever is happening, you're transferring from that profit, you decide, okay, I'm going to pay this much tax to the government, okay, this much I'm going to put in this reserve. All of those things, I don't know what is happening. Who am I? Cost accounting. So my scope was to manufacture the product, ensure that costs were minimal, and manage the inventory and manage my laborers. I've done all that. I've sold the product. I've given you operating profit. That's it. I'm done. After that, what you do with the profit is your business. Who are you? Financial accounting. So my scope ends. So if they give you any of these expenses that I'm going to read, what are you going to do? Keep them out of your cost sheet. So what are they? Loss on sale of fixed assets, not my business. Loss on investments, not my business. This is all management of money. Management of money is not part of cost accounting. Only manufacturing is part of cost accounting. Discounts on shares, debentures, interest on bank loan, expenses on raising capital, etc. All these are to be kept outside the purview of cost. So there is one expense here, interest on bank loan. Okay, this is a disputed item. So some people think that, bank loan could be taken to run the operations. So when you're taking a loan to run your operations, it's very much related to manufacturing. If you don't take this loan, then how will you manufacture? So in that case, this interest should be considered. Okay, but many say that ultimately it is management of funds. It is part of financial management and financial accounting. So it should not really, cost accounting should only focus on the operational aspect of the manufacturing process. They should not be concerned with funds, because for that we already have two big subjects taking care of it. So there are both schools of thought. So what do you do if this comes? So we follow a general rule. If this comes, keep it outside. Okay, and you will write a note that this is considered to be as a non-cost item. However, if you were to consider it as a cost item, could you take it in the cost sheet? Yes, because this is a disputed item. But we will follow this particular rule that we will keep it outside. Okay, generally. It's not wrong, but that is what the ICI has done. So let's follow with or go with what the ICI says. Okay, next, appropriations of profits. So donations and charities, taxes on incomes, nothing but your income tax, transfer to reserves, provision for bad debts, all of this is to be kept outside the purview of cost. Again, here we have one disputed item, which is provision for bad debts. So again, here some people say, why is this a non-cost item? This could be a cost item because it relates to sales. It is the sales for which the money you didn't get. Correct? You made this sale, and sale is very much part of costing, and you've not received the money. So this should be part of your cost sheet. But another school of thought says, but this is to do with debtors management, and debtors management comes under working capital management or financial management. So this should ideally not form part of costing. Again, you're deviating from the scope. So again, it's a mixed opinion. Both seem right. It's a disputed item. But again, if this comes, we will keep it outside. We will follow one rule. But if you were to consider it, would you be wrong? No, you wouldn't be wrong. You're just following one opinion. But as per ICI, we will keep it outside. Okay, so keep these two things in mind. These two are disputed items, but we will consider them as non-cost items and keep them outside. We will write a note to this particular effect if it comes in the problem. Next, writing off of fictitious assets like preliminary expenses written off, underwriting, commission, all of this is completely financial in nature, has nothing to do with costing. Costing doesn't even understand these terms. We don't know what is the meaning of preliminary expenses written off. We don't know. So it is to be ignored. Next, purely financial incomes. Like the way you're keeping expenses outside, incomes which are financial in nature also have to be kept outside. So rent receivable, profits on sale of fixed assets, interest on bank deposit, dividend received, etc. All of this is to be kept. Just like interest on bank loan was a disputed item, this will also be a disputed item, but we will keep it outside. Guys, okay? Next, notional expenses like rent of a factory building is to be included. So in costing, we have a theory. So that is that when it comes to explicit and implicit costs, both are considered. That is why I said it is to be included. What do you mean by explicit and implicit costs? Explicit costs are those costs which are out of pocket expenses. Now, I have purchased raw material from my supplier, correct? I'm going to pay him money. So I'm actually going to remove money from my pocket and hand it over to my supplier. It's an out of pocket expense. Can you pass a journal entry for this? Yes, you can pass a journal entry for this particular transaction. So such expenses which can be treated in your books of accounts are known as explicit expenses. So what are implicit expenses? Obviously the opposite. So implicit expenses are non-accounting costs. Okay, they are those expenses which cannot be treated in your books of accounts and they do not involve actual outflow of money. Like what? For example, this room. Okay, it belongs to me. Okay, but I am using it in my business. This is my business. Okay, teaching y'all is my business. I'm using this room for my business and this room belongs to me. Will I pay rent to myself? No, right? But my business considers me as different. So when my business is to make an analysis, is to make a decision, then my business will put all the costs together. That I paid so much for electricity, so much for power, so much for salaries, rent. My business will take this cost. How? I'm not paying rent, no? So my business will say, had this room been given to somebody on rent, I would have taken it on rent at 10,000 rupees. So 10,000 rupees. So total costs will include rental expense, though it is not incurred. That is an implicit cost. It's a notional cost. So such expenses will come in cost accounting. Why? For the purpose of decision making. Because my business looks at me as a different person. I may look at my business as the same person, but my business looks at me as a different person. Guys, is it okay? Everybody? So though I'm actually not paying rent to myself, my business, while calculating all the costs, will take this rent into consideration. Why? For the purpose of decision making. So this is an implicit cost. Can you pass a journal entry for this? No, we cannot pass a journal entry for this. That's why I said it cannot be treated in your books of accounts. So that is what is meant by notional expenses like rent of a building. What do you do if they have given you something like this? You include it. In costing, it will be included. Because in costing, we are going to do a lot of decision making. Costing is all about decision making. Guys, okay? Everybody? You can write this example in your own words. Guys, okay? Now come to point number 8. points that I've given you, they're all confusing points. So in problems, these are the points where they will try to confuse you. So if these concepts are clear, you will not get confused. So point number 8, discount. Now guys, throughout your journey, that is from getting the raw material to you selling your product, discounts can be given at 2 stages, or rather discount, the word discount will come at 2 places. One will be discount received. What is discount received? Which you have got. From whom? From your supplier. So you bought raw material. Now when you are buying raw material, you would want discount, right? So you will tell your supplier, please give me discount. So that is discount received. You have obtained that discount. And another place where this will come is discount allowed, where you have given discount to your customer. So when your product is all ready and you're going to sell it in the market, then your customer may ask you, can I get some discount? So then you decide, okay, I'm going to give you some discount. That is discount allowed. Okay. So this is when you are purchasing raw material. This is when you are selling your product, finished product. Correct. So now discount can be divided into 2 types in both stages. What are those 2 types? Cash discount, trade discount. Do you know the difference between cash discount and trade discount? Cash discount is given usually for prompt payment. So sometimes you have an installment scheme, correct, that every month you pay me 10,000 rupees or every week you pay me 5,000 rupees, correct. Now if I say that I'll give you a discount of 3%, you make the full payment now. So you might weigh those options, right? Okay, I'm going to save this much money if I get this particular discount. So here the discount is for making prompt payment. So if your supplier is giving you a cash discount, what do you do with it? You ignore it. It does not form part of costing. Why? Because this will come under creditors management. Creditors management or working capital management or financial management. Making prompt payment. I am not considered with payment. I am only considered with operations. So cash discount is ignored. But trade discount. Why is trade discount given? For making bulk purchases. Okay, you are buying 10,000 units. You buy 20,000 units, I'll give you 10% discount. To increase the quantity purchased. Now here the reason why discount is given is completely different. So if a trade discount is given to you, then what will you do? You will adjust it with your purchase cost. So where will this come in the cost sheet? Where will this come? Remember raw material adjustments. What did I tell you? Landed cost of materials. Remember? So opening stock of raw materials plus purchases minus trade discount minus closing stock of raw materials will give you raw material consumed. Remember? Carriage inwards discount I told you is to be adjusted with purchase cost. So trade discount you will adjust. Cash discount, forget it. Ignore. Because it is not as per the scope of cost accounting. Because the reason why this is given is completely different. It is to make prompt payment, which means it is part of financial management. Fund management basically. Guys, okay. Now, discount allowed. You are giving discount to your customer. Again, you may give discount for the same reason. You want your customer to make prompt payment to you, so cash discount. You may want your customer to buy more products from you, trade discount. So again, if you are giving a cash discount, ignore. Why? Because this is part of debtors management or financial management. It is not part of cost accounting. So cash discount has to be ignored in both places. Trade discount. You are giving a trade discount because you want your customer to purchase more quantity of that particular product. So where will you adjust this? From sales. You will adjust it in sales. So gross, how does this look? Gross sales minus discount, which is trade, gives you net sales. So profit will be on this. So deduct from sales value. So you can make a note of this. Guys, okay. So this is about discount. We'll finish off the miscellaneous points also. Point number 9, miscellaneous points. So what do? All selling costs are a function of sales units. We already saw this. We already know this. All other costs are a function of production costs. Or production units, sorry. Please make this units. Production units, sales units. We already know this. We did this when we did AOH and SNDOH. Point number 1. Okay. Usually office overheads are considered to be fixed. Selling overheads are considered to be variable. And factory overheads are considered to be fixed and variable if the question is silent. Okay, usually if the question has not given us any information, then this is what we assume. Office overheads are considered to be fixed expenses. Selling overheads are always variable. Your factory overheads are both fixed and variable. Now question is, what is fixed? What is variable? So fixed expenses are those expenses which do not depend or do not vary with output. And variable expenses are those expenses which vary with output. Simple example. Let's take this room. Okay. So this room, I'm paying a rent of say 10,000 rupees to conduct my operations. Correct? So now I have 100 of you sitting here. So I will still pay 10,000. Correct? Say in the next batch, I get 70 people. So can I go and request my owner, ma'am, this time only 70 came, I will not pay you 10,000, I will pay you in proportion. She'll be like, take your bags and get out. Yes or no? So rent does not depend on the output. In my example, you are the output. Yes or no? So whether 10 come, whether 0 come, whether 30 come, whether 70 come, whether 100 come, I still have to pay a rent of 10,000 rupees. I cannot go and negotiate with my owner. The rent is for this particular room. If I am using this room, I need to pay her 10,000 simple. Whether more come, whether less come, she is not concerned. Yes or no? So this is a fixed expense. It does not change with output. Okay. Whereas, now say there are 100 of you. Each of you have got this book. Yes, each of you have got this book. Now let's say the cost per book is 200 rupees. How many of you all are sitting here? 100. So what will the cost of books be to me? 200 is the cost per book. 100 of you are sitting, which means I have to give 100 books. So how much does it cost? 20,000. Say 0 come. Then 0. Yes or no? Say 10 come. 2,000. Yes or no? So see here, it's varying with the number of units. You are the units in my example. So if my units are 0, variable cost will also be 0. But if my units are 0, will my rent be 0? No, rent will not be 0. So what we learned from here is, at 0, fixed cost will be whatever I am incurring, variable cost will be 0. Fixed cost remains the same irrespective of change in output. Variable cost increases as output increases. Guys, is it okay? So write this point number 1, under that only, under this particular point only you can make a note of it. So at 0, fixed cost will be whatever you are incurring. In our example, it was 10,000. At 0, variable cost will be 0. Next point, write down. This is point number 1. Next point. Fixed cost remains the same irrespective of change in output. Point number 3, variable cost increases as output increases. For example, fixed cost, rent, salaries, etc. Variable cost, raw material charges. Guys, okay? So this is done. Now last point before we move on to the new cost sheet format. Come to point number 5. Guys, very important. Difference between prime cost, factory cost, conversion cost. Now prime cost we know, we've come across this term. Factory cost also we know, we've come across this term also. What is conversion cost? Conversion cost is the cost incurred in converting raw material to finished goods. Now my question to you is, this we know, as the name suggests, conversion cost, conversion of raw material to finished goods. Now my question to you is, the formula for conversion cost, is it material plus labor plus other expenses, or is it labor plus other expenses? Is one correct or is two correct? How many of y'all feel one is correct? How many of y'all feel two is correct? Ideally speaking, the whole class should raise their hands, because y'all didn't raise their hand. Y'all didn't raise your hands for the point 1. So the others who are not raising their hands have no comments. Yes or no? 1 or 2? 2. Yes. So this formula is correct. So conversion cost is the cost incurred in converting the raw material to finished goods. Because raw material we already have, no? We already have it in place. So the cost of converting it, what is the cost of converting it? The cost of labor and other expenses. Simple example. I ask you, you have a party to go to. Okay. So you're carrying a gift. Okay. You got this gift wrapped, because you're taking it to the party. So the cost of gift wrapping, is it the cost of the wrapper plus gift, or only the cost of the wrapper? Only cost of the wrapper, no. Not the cost of the gift. Gift you already have. So here also same logic. Raw material you already have. You have to convert it. So conversion cost will be the cost which will be incurred in converting it, which is labor plus other expenses. So see here, prime cost. Prime cost, tell me what prime cost is. Direct material, direct labor, direct expenses. So see here, I've put direct material, direct labor, direct expenses, factory overhead. Correct? So prime cost will have direct material, it will have direct expenses and direct labor, but it will not have factory overheads, because that is not what prime cost is. Prime cost is all my direct expenses put together. Factory cost. What will factory cost have, guys? What was factory cost? Prime cost plus factory overheads, which means it will have direct material, direct labor, direct expenses and factory overheads. Correct? Conversion cost. What will conversion cost have? Conversion cost will not have direct material, because material already there. I have to convert it. So what is the cost of converting it? So material will not be there. labor will be there, and other expenses will be there. Other expenses are my direct expenses and indirect expenses, which are my factory overheads. Guys, okay, so this is the difference between prime cost, conversion cost and factory cost. Very important. Sometimes they give the concept of conversion cost in problems. We will be solving some problems, that time you will understand. Guys, okay, everyone, sure? Shall we move on? So now we have points 2, 6 and the last point left. Fine. So now with this, old cost sheet is over. Okay, we move on to our new cost sheet format. Guys, old cost sheet format, new cost sheet format, very minimal differences. Okay, but there are differences. So we are going to see what those differences are. Now the old syllabus, guys, you need to be here. Okay, when I'm comparing it to the cost sheet, don't listen. Okay, but when we are doing those 3-4 points which were left, you need to be there, because what is pertaining to you, you need to understand. Okay, so let's see the new cost sheet, how it looks. So new cost sheet also starts off the same way. Direct material consumed, opening stock plus purchases minus closing stock gives me my raw material consumed. No difference. No difference. Plus direct labor plus direct expenses gives me prime cost. No difference. No difference. Plus factory overheads gives me gross works cost, plus opening WIP minus closing WIP gives me net factory cost. No difference. Till now, no difference at all. Till net factory cost, no difference between old cost sheet and new cost sheet. Okay, look at this. Now we have 5 items that we have added here, which was not the case in the old cost sheet. Okay, let's see what those items are. First, quality control cost, research and development cost. What is quality control cost? Cost which is incurred in checking the quality of the product which is manufactured. Correct? So quality control cost, research and development cost. So anything which is incurred towards research and development comes under research and development cost. So 2 items have been added here. Were they not there in our old cost sheet? No, they were there. They were there. So we will see where they were there. Okay. So come to your point number 2. Research and development overheads. Research and development overheads. Now guys, research and overhead, when we are looking at research and development overheads, we can classify R&D into 2 types. Okay, one is product related. When you are doing an R&D in relation to the product that you are selling. Okay, whereas R&D could also be in relation to processes. Now my manufacturing process is that my raw material is passing through A, then it goes to B, now it goes to C, then it goes to D. Now I've changed it. Now I've removed these intermediate processes in the middle, and now it has directly from A it's going to D. There's a new innovation that I have made in my processes. So it could be anything. If it is process related, life is simple. Whether old cost sheet, whether new cost sheet, doesn't matter. Why? That is when it is product, non-product related, like in this particular case, which means we're not looking at R&D in relation to the product that we are selling. We are looking at R&D when it comes to the process. So if it is a factory process that we're talking about, where is this cost being incurred? In the factory. So this will form part of factory overhead. If you're talking about office process, then it is AOH, because it is incurred in the office. If it is selling and distribution, anything related to my selling and distribution, because it is related to selling and distribution expense, it will come as part of selling and distribution overheads. Simple. So this is old and new both. Correct? But if it is product related, that is where old and new differ. So in the old cost sheet, if it is product related, where would it have come? it would have come as part of direct expenses. Because it is product related, it can be identified on a per unit basis. So you would have placed it under direct expenses. Where direct expenses? Direct material, direct labor, direct expenses. So it would have been part of prime cost in the old cost sheet. Now what have they done? Now they have removed it from here. That is part of the new cost sheet. Where have they placed it? Quality control, testing, research and development, kept separately to form part of cost of production. First difference. So first you need to figure out, when they have given you research and development overhead, you first need to figure out if it is product related or non-product related. If it is non-product related, doesn't matter whether you're in old syllabus, new syllabus, it's going to be the same. What? Factory process, factory overhead. Office process, AOH. Selling and distribution process, SNDOH. But if it is product related, then what happens? In the old cost sheet, it is part of direct expenses. Why? Because it can be directly associated with per unit of the product. But now what have they done? Now you don't have to place it under direct expenses. New syllabus, guys. Where will it be placed? It will be placed after your factory cost. So after you get your net factory cost, you will add any quality control cost or research and development overheads will come there, or any testing cost. All of those costs will come separately. Now, does your answer change? If you do this, as per the old cost sheet and new cost sheet, does your answer change? No, answer will not change. It is merely a classification difference. That's it. See here. If you look at your cost sheet here, your answer will not change, obviously. So when you look at your old cost sheet, this expense would have been part of direct expenses. Direct expenses are also divided by production units. Correct? And now in the new cost sheet, where am I placing it? I am placing it here. This is also divided by production units. So where is your answer changing? Answer is not changing. It is merely a classification difference. From top you are bringing it down. That's all. But will you lose marks if you do this wrongly? Yes. Classification has to be correct. Guys, okay, so the first difference, quality control and research and development cost. Guys, did you all understand difference between old cost sheet and new cost sheet? Okay, everybody, next. Very, very, very important. Very, very, very important. Administration overheads. In the old cost sheet also, that only we were doing. What were we doing? See here. To works cost we were adding administrative overheads to get cost of production. In the new cost sheet also we are doing the same thing. We are adding administrative overheads. But. See here, additional words given to us. Relating to production activity. Relating to production activity. So in the new cost sheet, now what have they done? They have bifurcated administration overheads into two parts. One is related to production activity and the other one is other general administrative overheads. So see here, if you go to the last page here, guys, this is only for the new cost sheet, guys, the new syllabus, guys. Old syllabus, do not bother about this. Does not pertain to you. So see here, treatment of AOH. In the old cost sheet, what do? Simple. Add it to factory cost to get cost of production. Simple. That's it. End of story. We just know one thing, which is AOH. But in the new cost sheet, what do? We are bifurcating AOH into two types. What? One is related to production. This is what is coming there. Where? To become your cost of production. So you add the other, your R&D and your quality control. Along with that, you also take administrative overheads, only the ones which are related to production. And then you will get your cost of production. Guys, okay. Whereas, what happens to the other part of AOH? The general AOH. So general AOH will be things like management expenses or head office expenses, all of these things which are not really related to production directly. So what do you do with these expenses? These expenses will be placed here, guys. Here, see this? After cost of goods sold, what do? You add your selling and distribution expenses now. So after selling and distribution expenses, you add general administrative overheads. So I have divided my AOH into two parts. What? Two parts. This part related to production goes to cost of production. This part not related to production. It is general. This will be treated just like the way you treat selling and distribution overheads. Guys, okay? Very, very important. Now my question to you. Old syllabus forget. New syllabus, guys, listen. Question to you is, the fact that they have done this, they have divided AOH into two parts. Will this change our answer? Yes. Why? Closing stock valuation and opening stock valuation if it is valued at current cost of production. Your answer will completely change because they have done this. Tell me why? Because, see here, the AOH that you place here will be a function of production, which means you will divide the total cost by production units. Correct? But the AOH that you place here will be a function of sales. That's why I said it is treated like the way you treat selling and distribution overheads. So your valuation of opening and closing stock will be different. Guys, did you all understand? So this will change your answer. Nothing else will change your answer. All the other differences that have happened, none of them will change your answer except this. This will change your answer. So your cost sheet in the old syllabus and cost sheet in the new syllabus will be two different answers. Did you all understand? Everybody? So what did we see here? We saw these two, correct? This was in the old cost sheet format placed under direct expenses. Now we are placing it as part of cost of production. Administrative overheads, what happened? Administrative overheads were bifurcated into two parts. One part was related to production, which we are placing here. One part was general administration overheads, not related to production. What are we going to do with them? Place it under selling and distribution overheads. Now, the one which is placed here, which is part of cost of production, is a function of production, which means number of units produced. The one which is placed below, that is next to selling and distribution overheads, is a function of sales. Did you all understand? Everybody? So this is very, very important. So now many times we get confused when the problem is given to us. So we'll see what to do with it. Okay. Next. Yeah, credit for recovery, scrap by byproducts or miscellaneous income, any scrap value that you have recovered by selling units which were not meant to be sold to the customer, that will be recovered here. So you will get that particular amount. So that is an income basically. So we are accumulating costs because it's an income, it will come under minus. Very simple. This was the case in the previous cost sheet also. No difference. Add packing cost. Add packing cost, which is the fifth difference. Fifth difference. Guys, now what do? See this? Come to point number 6. Packing expenses. So we need some background of packing expenses. Okay, what are packing expenses? Now packing expenses can be classified into two types. You have primary packing, you have secondary packing. What is the meaning of primary packing? The first line of packing, basically, okay, most important. This packing is essential. Without this, the product cannot be sold. Imagine toothpaste. Toothpaste is a paste, right? That is the product. It comes in a tube. If that tube were not there, can you sell toothpaste? Like imagine taking it like this and take. Not possible, right? So you would have to put the toothpaste in a tube. That tube is the primary packing. Correct? So essential packing, without which The product cannot be sold. Essential packing without which the product cannot be sold. You can write an example. They're saying tube of a toothpaste. Whereas secondary packing, what is secondary packing? To enhance the appeal. To enhance the appeal of the product. So now the tube, now I've already put my toothpaste into the tube. Now the tube can be sold as it is. But no, what do? We put it in that carton box. We put a nice looking man or a woman there with teeth shown with white color sparkles on them to enhance the appeal, so that when you see that box, you will automatically get attracted towards it. Correct? So why are we doing this? To understand where to place these expenses. So primary packing is, if this packing is not there, I cannot sell it, which means this packing is very much part of the product. But secondary packing is to enhance the appeal. So very simple. Where do you think secondary packing will come? Selling and distribution. It's to enhance the appeal of the product. It's to sell the product in the market. So this is part of selling and distribution overheads. Very clear. Now, if we are looking at primary packing, the essential packing, now the way you treat primary packing differs in the old cost sheet and new cost sheet. In the new cost sheet, what do? You place it as part of those other 4 items. Simple. You saw, no? See here? You placed it here. Primary. Correct? So along with quality control, research and development, AOH related to production, packing also will come here. Simple. They've changed the classification. But if you are in the old syllabus, cost sheet, what happens there? So there, we have to do some more analysis. What is that some more analysis? Now the packaging that we are looking at, if that packaging is made by the organization, let's say the tube in which the toothpaste is put, the organization who's manufacturing the toothpaste is also manufacturing that tube, then that will form part of direct material. Why direct? Because it can be identified on a per unit basis. So if 50 grams of toothpaste has to go in one particular pack, then we know we need 1 tube. So for every 50 grams, I know I need 1 tube. So it is directly associated with the product. So it is direct. And because the organization itself is making the tube, it is part of direct material. Okay. But if the organization is purchasing it from a third party, so I am only manufacturing the paste, the tubes I'm getting from a third party vendor, then that is not material to me, that is not labor to me, then it is, but it is directly associated with the product, so it is part of direct expense. This is as per the old cost sheet. Which cost sheet? Old cost sheet. So you have to see, if the package is made by the organization, then it is direct material. If the package is procured from a third party, then it is direct expense. If you are in the new cost sheet, where will you place this? Down. Now, does this change your answer? Does this change your answer? This classification difference, old to new? No, because if you are in the old, it will either be in direct material or direct expense, a function of production units. And if we are in the new also, it is part of cost of production, which means we are still as a function of production units. So your answer will not change. So where does the answer change? Only for AOH. The answer changes only for AOH. New cost sheet. Guys, is it okay? Everybody? So now, let's finish the cost sheet. So we've added all these things. So in the old cost sheet, this would have been part of direct expenses, the first 2 items. AOH in the new cost sheet would have completely come here only. But here we're only taking a part of it in this cost sheet. The remaining part will go to your cost of goods sold to make cost of sales. Packing expenses in the old cost sheet would have been either part of direct expenses or direct material. Here it is part of the remaining 4 items. So it will become cost of production. So now I get my cost of production. Now everything is same. What? Opening stock of finished goods, I add, minus closing stock of finished goods, I remove. I get cost of goods sold. To cost of goods sold in the old cost sheet, I was only adding selling and distribution. But here I have one more item to add, which is AOH general. So I will add both. So they have said marketing overheads, which are nothing but selling and distribution overheads. I will get my cost of sales. To cost of sales, I add profit, I get sales. So this is the difference between your old cost sheet and new cost sheet. Quickly run through all the pages and see if we have covered all the points. I think we have. Yes. So now the question comes, you may ask, ma'am, now should we use new cost sheet format or old cost sheet format? Because now you've told that, because of that one point, the answer could be different. So like I said, the difference between the old cost sheet and new cost sheet is very prominent. Okay. So if in the question they specify those changes prominently, then what is it? New cost sheet. It's a hint to you. Now they give you quality. Do they ever give you things like quality control cost, testing cost, research and development? Never comes in the problem, correct? So if they're specifically giving you those things, they specifically say AOH general, AOH related to production. If they specifically give you these things, then it's understood you have to do it as per new cost sheet format. Okay, but if they've not given any of those things, they've normally given you, they've said, yeah, factory overheads were A, B, C, D, AOH was this, opening, closing, all of that. Then what do? Follow old cost sheet format and write a note below saying AOH, which is given, is related to production. That's it. End of story. Old cost sheet, no problem. I mean, the old syllabus, guys, you only have to follow old cost sheet, no problem for y'all. Guys, okay. Everybody clear? So there should be no confusion. Okay, now a couple of things that I want to tell you before we move on to the problems. So the first thing is cost unit, cost center, cost period. We should have some knowledge of this before we start our problems. Okay, because these are very, very important things. So these are called as the expressions of cost. So when you're solving a given problem in costing, guys, please look for the cost period. Okay, you cannot have one cost being calculated for a month, another cost being calculated for the entire year, a third cost being calculated for a week. It doesn't work like that. Figure out in the problem what is the cost period. Is it 1 year? Is it 1 month? Is it 1 week? And all costs have to be accumulated for that period only. Correct? So that is your cost period. Cost unit. What is the cost unit? Cost unit is nothing but the way the cost is expressed. Okay, so now if I say I'm calculating the cost of cement, so how will you express this cost? Per bag or per quintal or per kg, correct? Those are my cost units. Now when it comes to products, okay, when it comes to products, cost units can be easily determined. Okay, the cost unit becomes complicated when we are looking at services. Okay, because service is something which is intangible. So this particular area is still under development. There are still a lot of services where we are trying to figure out how to, essentially figure out what the cost unit could be, how to calculate the cost associated with that particular service, and then, subsequently get my profit and the selling price. So this particular area, it's a bit difficult to figure out the cost unit. So we use something called as the concept of composite cost unit. We will be doing more of this in service costing. Okay, composite cost unit. What do you mean by composite cost unit? The use of two cost units. Okay, two cost units. For example, when you go to a hotel, okay, say you're checking into a room. So when you ask at the reception, what is the cost of this room? What do they say? They say, sir or ma'am, it would be say 3,000 rupees per day for one room. So there are two units involved here. One is day, one is room. Yes or no? So we are using two units here. This is the concept of composite units. Okay, so when it comes to hotels, hospitals, we use room days as the cost unit. Okay, hotels we use room days or room nights. Both are the same. Hospitals we usually use patient days or bed days or patient nights or bed nights. It kind of varies. Okay, so we have to be very careful with our units. Okay, sometimes we need to calculate unit in one way. In the question, the unit will be expressed in another way. So you have to convert. Okay, so be very careful about the units. Again, while presenting your paper, please put the units together. You have to write the unit. If you don't write the unit, you're going to lose marks for it. So if you have calculated, say, EOQ for something, you know what EOQ is, right? Economic order quantity, which we will be seeing in a while, correct? So what is EOQ? Economic order quantity. EOQ talks about number of units. So if you get your EOQ, which is say 300, assuming, what is the unit for it? The unit for the material. So it's either units or kgs or quintals or whatever they've given, correct? So you have to write this. Don't just write 300 and leave it there. Okay, if we are calculating, say, cost of production, let's say the cost of production is 1 lakh. What is this? Cost, right? So what will the unit be? Rupees. It will be rupees. So you have to write these units in place. Okay, very, very important. So as and when we do the problems, you will understand what units we have to use. So cost period, cost units. And the next one and the last one is cost center. Okay, cost center is nothing but a segment, a person, a plant or a machine for which costs are accumulated. So what is it that I'm exactly accumulating costs for? So let's say we need to calculate the cost associated with a delivery van. Okay, so all the costs that you will accumulate for that delivery van, it could be, you know, the depreciation, the oiling, the repair, whatever be the case. So all these are costs associated with that particular delivery van. So in my example, what is the cost center? For what am I calculating costs? For the delivery van. So delivery van is a cost center. So cost center could be anything. It could be a unit. It could be a person. It could be a segment. It could be a department. It could be a machine. It could be a plant. It could be anything. So for whatever you're calculating costs, that is called as a cost center. Okay, so cost center, cost unit and cost period. Okay, so I'm telling this to you all because in the problem they use the words cost center. So they may say that the following data has been given for this cost center. So you should know what it means. Don't just blindly read the problem. Reading the problem, interpreting the problem and solving the problem is an art. Okay, you need to inculcate that art if you want to be really quick in the exam and score more than 60 in this paper, which is very easy actually. Getting an exemption in costing is the easiest. You should just know where to look and what to look for. Okay, so please be very careful about your units, your period and what you are accumulating costs for. Okay, so this ends the conceptual part of chapter 1. We will be looking at the problems. Shall we take a break? So this is your lunch break. I'm considering this as your lunch break. So it's 1:10 now. 1:45 we will start. Okay. What time? 1:45. So please be here on time. We will immediately start off with the problems. Okay. See you at 1:45. Okay guys. So welcome back. Now we will move on to the problems. Okay, so come to the problems, page number 114. Yeah. Page number 114. Let's start. So the first problem is just very basic classification of course that we already know. So as and when we are reading the problem, we will solve this question, and then from problem 2 we will start our practical problems. So let me read the problem first. So first category, classification of course. Question number 1. A company manufactures and retails clothing. You are required to group the costs which are listed below in the following classification. Each cost is intended to belong to only one classification. So what are we doing, guys? What is our business? It is buying and selling clothes. Correct? We are manufacturing raw material for clothes, manufacturing clothes and selling clothes. This is our business. So keep this in mind while classifying costs. Very, very important. So first, what are the various classifications they've given? You either have to put it under direct materials or direct labor or direct expenses or production overheads, office and administration overheads, selling and distribution overheads, research and development costs, or non-cost item. Okay, so let's start. First one, telephone rental plus metered calls, office and administration overheads. Perfect. Next, wages of security guards of factory. Because first of all, why? You have to figure out why. These are my direct wages. No, they are my indirect wages, because guards are not directly associated with the production or manufacturing of clothes. So they are my indirect wages, and they are incurred where? They are incurred in the factory. So factory overheads. So FOH. Guys, next. Next, parcel sent to customers. It is selling and distribution. Next, wages of operators in cutting department. Direct labor. You are in the business of manufacturing clothing. So the people who are in the cutting department are directly associated with the product. So these wages will be direct labor. Next, developing a new product in the lab. R&D, research and development overhead. Next, wages of forklift drivers who handle raw materials. Guys, wages of forklift drivers. So that means it is labor cost. Correct? Now where labor cost? Is it direct or indirect? It's indirect. Can you associate that with per unit of the product? No, they are not. They are only lifting this material and putting it there. They are not manufacturing the product. So it is not direct, it is indirect. Yes or no? So where will this come? So if it is indirect, it either has to come under FOH, AOH or SNDOH. Where is this happening? In the factory, correct? Because the product is being manufactured in the factory. So this will be part of FOH or POH. Please don't get confused. Don't add this to raw material cost. Guys, next, wages of storekeepers, factory overheads. Perfect. Storekeeper is the person who's in charge of the stores, and stores is the place where you are storing all your raw material or finished goods, whatever be the case. Next, cost of painting advertising slogans on delivery vans. Selling and distribution overheads. Perfect. Delivery vans are part of distribution. So anything to be done with delivery vans will come under S&D OH. Next, auditor's fee. Why? You don't consider yourself as part of the organization, is it? Nope, this is AOH. If you are in the new cost sheet, then this will be part of general administrative overhead. It is not related to production. But auditor's fee will also be part of AOH. Who's telling you that it is statutory audit? It could be internal audit also, no? It could be anything. Internal audit is very much part of the organization. So auditor's fee is your overhead. So it is part of AOH, administrative overhead, not non-cost item. Yes or no? Next, chief accountant salary, AOH. Cost of advertising on television, selling and distribution overhead. Next, lubricants for sewing machine, FOH, factory overhead. Can you identify lubricant with per unit of the product? No, not possible. Can you tell in one cloth how much lubricant is going? Not possible. It is for the machine where the cloth is being stitched. So you cannot identify it. So it cannot be direct expense. Floppy disks, God knows which zamana they're living in, for general office computer, AOH. Maintenance contract for office photocopying machine, AOH. Interest on bank overdraft, non-cost item. Non-cost item. I could consider it also. Yes, because it's a disputed item. But I'm going to keep it outside the purview of cost accounts. So non-cost item. Next, market research undertaken prior to product launch. Market research undertaken prior to product launch. Selling, it is R&D, but where will it come? Selling and distribution expense. So this will be selling and distribution expense. Non-product related R&D, because you're doing a market research, correct? So this will be part of selling and distribution overhead. Next, carriage on purchases of raw materials. Direct material, you will add it to the purchase cost. Remember, landed cost of materials. So this you can say direct materials. Next, amount payable to a company for broadcasting music throughout the factory. I missed something. Oh, sorry. Yeah. Royalty paid on number of units for a particular product produced. This we discussed also. So direct expenses. Next, road licenses for delivery vehicles. Selling and distribution overheads. Because we're talking about delivery vehicles, everything related to selling and distribution will come under S&D OH. Next, amount payable to a company for broadcasting music throughout the factory. Where is this cost being incurred? So where will it come? Factory overhead. Simple. Interesting. This is an interesting one. Yes. Next, donations. Non-cost item to be excluded. Next, cash discount allowed, which means I have given, right? So ignored, which means again non-cost item. Guys, okay? So this is your classification. Move on to the next problem. Now we start off with our problems. Okay, so let's read part B, treatment of abnormal loss of material. So in this particular problem, our focus will be on this. Okay, so let's read the problem. From the following particulars, prepare a statement in such form as you consider most suitable for showing clearly all the elements of cost. So what have they given? Particulars and amount, opening stock of raw materials, purchase of raw materials returned to suppliers, closing stock of raw materials, wages paid to productive workers, wages paid to non-productive workers. Guys, what's the difference? When they say productive and non-productive, are they talking about workers who are efficient and workers who are not efficient? So when they say productive, they are trying to tell you these are direct laborers and these are indirect laborers. Okay. Next, salaries paid to office staff. Where will this come? AOH. Where will wages paid to non-productive workers come? FOH. It will come under FOH. See, it could ideally be anything. It could be FOH, AOH or SNDOH. Since the question is not clear about what it is, we usually put it under FOH. Next, carriage on raw material purchased. Direct material. What about purchase, opening, closing is okay. What about this one? Raw material returned to suppliers. What do I do with this? So I have to deduct it from the purchase cost. Carriage will be added to the purchase cost. Next, carriage on goods sold. SNDOH. So like the way you are incurring carriage when you are purchasing, even when you are selling, you could incur carriage. Correct? So that will become part of selling and distribution because it is part of distribution. Next, fuel, water and gas. So this is SNDOH, this is FOH. Repairs to plant, FOH. Perfect. Depreciation on machinery, FOH. Office expenses, AOH. Where is abnormal loss? That's not come only till now. Direct chargeable expenses, direct expenses. Advertising, SNDOH. Abnormal loss of raw material. So what am I supposed to do? I have to remove it. And where will this go? Costing P&L account. Because this cannot form part of my cost sheet. And they have given me sales. So shall we start? Yes. So let's start. Let's go to our classwork. Let's go to our classwork. Let's start. Let's put the heading first. Cost sheet for the period so and so. Particulars, amount. Guys, here my cost sheet, will it have units, per unit, amount? Why not? Because they have not given us opening stock, closing stock, units. We don't have to value it. Opening stock, closing stock only is not given of finished goods, which will require valuation. So no need to put units, per unit and total column. One total column will be enough. Only when I need to value that, I need the 3 columns put together. Guys, okay? So shall we start? What do we start with? Raw materials. So opening stock of raw material. Guys, how much? 30,000 plus purchases. How much? 75,000. Guys, what else? First, carriage inwards. Remember, carriage inwards had to be adjusted here. So let's add carriage inwards, which is 600. Anything else which will be added? No, right? No. Now let's start the minus. So minus raw material returned to supplier. Guys, how much? 3,000 worth was returned, minus closing stock should come last. So is this the last? Guys, abnormal loss of material has to be removed, na? It cannot go on become the cost to the customer. So minus abnormal loss of raw material. How much was that? 1,500 minus closing stock of raw material. How much is the closing stock? 20,000. So this gives me raw material consumed. 81,100. 81,100. Now what? Direct labor. How much, guys, direct labor? 18,500. Anything else? Direct expenses. So guys, as in when you're picking a particular item and adjusting it, keep ticking it off. Keep ticking it off. So you will remember what you have taken and you will know what is left. So I still cannot calculate my prime cost. Why? Because I have to take direct expenses. So plus direct expenses. How much were the direct expenses? 1,200. What do I get? Now I will get my prime cost. So how much do you get? 1,08,000. 1,08,000. Now, factory overheads. Guys, there are many, no? Tell me one by one, what are they? First, wages to non-productive workers. How much? 2,500. Guys, next, fuel, gas, water, etc. 3,500. Repairs to plant, 1,000. Next, depreciation on machinery, 1,500. Anything else? I've considered everything. Any opening, closing stock of WIP? Not given. So this is my factory cost. How much? 1,09,300. 1,09,300. $1,09,300. Now what? Administration overheads. So what all will I take under administration overheads? salaries paid to office staff. Guys, how much? 5,000. Next, office expenses. How much? 2,600. Anything else? No, right? So what is this? So one note we will write in the end saying it is assumed that administration overheads are related to production. Yeah, you could, but here see, this is salaries paid to office staff, correct? And office expenses. So it you could assume that it is not related to production and it is general production. So you could do that also. Okay, but we will follow one system. Okay, so let's not do something hatke or very weird. Let's in costing always remember, always go with the general trend. Do not go with anything specific. Okay, we could. If you are exploring the subject, you could. But for the examination, let's stick to the general trend. Let's not deviate too much. Okay, because the ICI will have its own way of correcting the paper. And if you don't follow the trend followed by ICI, you will unnecessarily lose marks when you know the concepts well. Okay, so we will write a note there. Old syllabus, guys, no need to write a note. You can just directly solve. Because there is no such classification difference for y'all. So what do you get? Cost of production to be 1,900,000. Any opening or closing stock of finished goods to adjust? Nothing. So this is also my cost of goods sold. Correct. Now to this, selling and distribution overheads. What all are there? First one, carriage outwards. How much would that be? 2,000. Advertising expenses. How much? 1,600. So how much do you get? That's it, no? No other costs. So this is cost of sales or total cost. So how much total? 1,20,500 plus profit. They have not given us the profit, but they have given us the sales. How much are the sales? 1,40,000. So profit will be balancing figure. How much do you get? 19,500. 19,500. So we've not yet finished. We need to write note. So note, first, it is assumed that administration overheads are related to production. Next, abnormal loss of material is transferred to costing P&L account. Guys, okay? Are we all done? Move on to the next problem. Okay, let's move on to the third problem. Treatment of defectives and scrap in the cost sheet. Okay, so let's see what happens. The following figures have been taken from the books of KG Limited for the year ended 31st March. Raw materials, they've given us the opening stock, purchases and closing stock of what? Raw materials. Direct wages have been given. Works overheads, which is nothing but my production overheads or factory overheads. 100% of wages, which means my wages are 6 lakhs. So POH or FOH will also be 6 lakhs because it is 100% of direct wages. Stores overheads on materials. Stores overheads will be what? Stores overheads will be what? Factory overheads. We saw that even in the first problem, right? So this will be factory overheads. So one they have already given, one more they have said stores overheads. What have they said about stores overheads? 10% on the cost of material consumed. So first we need to find out what is the material consumed. How will we find out material consumed? Opening plus purchases minus closing will give me my raw material consumed. That into 10% will be stores overheads, which will come under factory overheads. Only then I will get my factory cost. Correct? So this is very easy, very simple. Line by line we are decoding now. Okay. Now let's see what they've given. Point number 1. 10% of the castings were rejected for not being up to the specification, and a sum of rupees 2,40,000 was realized from their sale as scrap. So 10% of the castings were rejected. Why? Because they were not up to the mark. So what did we do? We threw them away, or we sold them rather, and when we sold them we realized 2,40,000 as scrap. So what will this do, scrap? Where will this scrap come? You will subtract it because you are realizing this by selling these castings, which means it will reduce your cost. Okay, but we need to find out 10%. What is that 10% figure? We don't know yet. Correct? So we will see what to do with it. Next, point number 2. 10% of the finished castings. 10% of the finished castings. So let me circle this term here. Finished castings were found to be defectively manufactured and were rectified by an expenditure of additional works overhead charges to the extent of 20% of the proportionate direct wages. Okay, too much to process. Now I will come to that particular part, but first we need to understand what is the meaning of 10% of finished castings. So let's read the third point before we come to that particular part. The total gross output of castings during the year was 600 tons. Now let's discuss. So guys, how many castings did I totally manufacture? 600 tons. Okay, 600 tons was what I manufactured. Now what did they tell me? They told me first 10% were completely defective, which I sold in the market, and I got a scrap value of 2,40,000. So 10% will be how much? 60 castings. 60 castings. Correct? 60 castings were sold. So first defectives which I found out were those defectives which could not be rectified. Correct? I found them to be defective and I decided that I will sell them off. Whatever I get, I will get. That will reduce my total cost. So I got 2,40,000. Second kind of castings which were defective were what? They were defective and we found that they could be made good by incurring additional expense. So abhi additional expense they have not given to me. I have to find out. So let me come to that part in a while. Now the question to you is, they have said, what have they said? They've said 10% of the finished castings. What is this finished castings? What is this finished castings? Can you all tell me? What is 10% of finished castings? 600 minus 60. 600 minus 60. So my finished castings would be 600 minus 60, the remaining, because 60 were defective, I sold them off, which means the remaining was supposed to be finished, correct? Which means 540 castings were supposed to be finished castings. So now, though they were finished, I saw 10% of these finished castings were found to be defective, but I could correct them. So how many castings? 10% of castings were defective, could be rectified, which means how much, guys? 540 into 10%, which is 54 castings. Guys, correct? So don't do 10% into 60 and then 10% into 60 again. So pehle, what did we do? Total castings manufactured 600. In that we found 10% to be defective. We sold them off 60, which means the remaining castings are finished. Correct? But then on analyzing, I found 10% of those remaining finished castings also to be defective. So remaining or finished castings were 540. 10% of 540 is 54. But these castings could be rectified. How? By incurring additional cost. So now the second part of that point, they have told us how to calculate the additional cost which is incurred in rectifying these castings. Guys, okay? So the castings which didn't give us any trouble were 540 minus 54, which means 486. Guys, correct? So you can say working note number 1. Scrap value was 240,000 for this. Guys, okay? So now our only hurdle in the problem is to find out the value of that additional expense that we need to incur to make good the defective castings that we are not selling. Correct? So let's see what more is left in the problem. So what are we supposed to do? Prepare a statement of cost to determine manufacturing cost of the saleable castings per ton. So we have to calculate the manufacturing cost of sellable castings. So first I want you to tell me how much will my sellable castings be? How many castings can I sell? 486 or 540? Guys, 540, not 486. Though 54 castings were defective, but didn't I rectify them? I incurred additional costs and I rectified them. Correct? Which means now I can sell them just like the way I'm selling other castings. So my total cost will be divided by 540 castings to determine the cost per casting. So this problem is very clear, crystal clear. The only thing which is not clear is that one part, how to calculate the additional expense to make good the defective castings. Correct? Other than that, everything is clear. So shall we start the problem, and then when we come to that part, we'll solve it? Yes. So let's start. Come to the classwork. Is there a name given? Yeah, KG Limited. Cost sheet for KG Limited for the year ended 31st March. For the year ended 31st March. Now, how should my cost sheet format look? Units per unit total? Required? Not required. No, they've not given any opening stock, closing stock. Not at all required. So, basic format. Particulars. Amount. Particulars amount. Right? Shall we? Okay. So, let's start. First, opening stock of raw materials. Guys, how much? 420, which is you. 4,20,000. At least laugh, man. So serious all the time. Okay, 4,20,000 opening stock plus purchases. How much? 30 lakhs minus closing stock of raw materials. Any other cost to be added here? No, right? No carriage inwards, no trade discount, nothing is given. So how much? This is 3 lakhs minus, so this gives me raw material consumed 31 lakh. 31,20,000. Next, what do I do? Direct wages. So direct wages, how much direct wages? 6 lakhs. Any direct expenses given in the problem? No. So this is prime cost 37,20,000. 37,20,000. Now what? Factory overheads. So plus factory overheads. What have they said? 100% of direct wages. So 100% of 6 lakhs, which is 6 lakhs. Next, stores overheads. What have they said? 10% on cost of material consumed. So 10% of, guys, cost of material consumed is 31,20,000. So how much do you get? $3,12,000. Correct? So till here everything is sorted. So whatever cost they've given in the problem, I've already considered all of those. Right? But first thing that I need to consider now is the scrap value. The scrap value, what will it do? It will reduce the cost. So let's Do that. Minus scrap value of defectives. Correct? How much, guys? 2,40,000. Right? 2,40,000. So this is also adjusted, no problem. Now what is coming? Now let's read the second point again. Okay, so let's read together. 10% of the finished castings that we know, how much? 54 castings, were found to be defectively manufactured and were rectified by an expenditure of additional works overhead charges to the extent of, this is important. Till here we know what is happening. Now what? How do we calculate what was the expense incurred? 20% of the proportionate direct wages. So 20% of what? Of proportionate direct wages. What do you mean by that? Now direct wages have been incurred to the extent of 6 lakhs. For how many castings? 600 castings. This 10% of finished castings were how many? 54. So what are they saying? Use proportionate direct wages, which means for 600 castings, if 6 lakh was incurred, for 54 castings, how much is incurred? Whatever you get into 20% is my additional cost. That is what they're saying. I'm only interpreting what they've told in the problem. Guys, you like it or not, costing is all about English. It's all about English. It's funny because it's a practical subject, but every single word, if you just read it and interpret it like the way it should be, your life becomes very simple. I simply read this part 3-4 times. 20% of the proportionate direct wages. So first I need to figure out what is proportionate direct wages. Now I know 6 lakh rupees has been incurred for 600 castings, the total castings, but this 10% of finished castings were how many? 54. So proportionate will be if 54 into 6 lakh by 600. That is proportionate. But is that my additional expense? No, it is 20% of this proportionate expense. So first find out proportionate expense, then 20% into that will give me my additional works overhead. So shall we calculate? So let's go. So plus additional works overhead for rectifying defectives. Let's say working note number 1. Guys, all your working notes must be connected to your main answer. So I don't want to do the working here because then it will become very clumsy. So we will go to our working note, we will do all our working there, but please ensure you connect the working note to the main answer. Okay, very, very important. So let's say working note number 1, calculation of additional works overhead for rectifying defectives. For rectifying defectives. So direct wages 6 lakhs were incurred for 600 castings. Proportionate direct wages for 54 castings will be how much, guys? 6 lakhs into 54 by 600. So additional expenses for rectifying defectives will be 20% of 54,000. How much? 10,800. 10,800. Guys, okay. We'll go to our main solution now. Let's write 10,800 directly. We've already connected to the working note. Connected this part to the working note. More than enough. Anything else? No. So shall we calculate total cost? ₹44 lakh, 2,800. After putting everything together, 3720 plus 6 plus 3 lakh 12 plus 10,800 minus 2 lakh 40,000. 44 lakh 2,800. This is my total cost. But is that what they have asked in the problem? No. They have asked you to calculate the cost per casting. Correct? So per casting means cost per casting will be total cost divided by finished castings or sellable castings. So 44 lakh 2,800 divided by how many sellable castings, guys? 540. How much you get? 815. This is my answer. Shall we move on? Are we done? Okay. Question number 4. Treatment of missing figures. So now if you have a lot of missing figures in your cost sheet, how do you complete your cost sheet? Okay, that is what we are going to tackle in this particular problem. So let's read. Information is available for an organization X Limited for the period September 1st, 2003 to October 31st, 2003. 2003. So this is the information that they have given. Direct materials purchased 2,50,000. Work in progress inventory on 1/9/2003. What inventory is this? Opening WIP has been given. Direct materials inventory on 1/9/2003. Again, opening stock of raw materials. Finished goods inventory on 1/9/2003. Again, opening stock of finished goods. Indirect manufacturing costs. What are indirect manufacturing costs? Factory overheads. Factory overheads given. Sales revenues. Okay, total sales. Guys, for factory overheads, indirect manufacturing costs, they have said it is 40% of conversion cost. What is conversion cost? Does not include material cost, which means labor plus other expenses. Correct? That is what they have given, but they have not given us conversion cost till now. We'll see what to do. Let's move forward. Direct manufacturing labor. Direct labor. This is given. Next, prime cost. They've given us the prime cost also. Okay. Next, gross margin percentage based on revenue, 30%. What is this? Profit on sales, profit on revenue. Profit percentage on revenue has been given, which is 30%. Revenue has been given. I can easily calculate the profit. No problem. Okay. Cost of goods available for sale. What is this? What is cost of goods available for sale mean? So, cost of production plus opening stock of finished goods will give you your cost of goods available for sale. So, if you didn't know what it meant, you would not have been able to solve this problem. Correct? Required. What do we need to do? Finished goods inventory on 3110. Closing. So, closing stock. WIP inventory on 3110. Again, closing stock of WIP. Direct materials inventory on 3110. Again, closing stock of direct materials or raw material. Basically, closing stocks have not been given at all three levels. So that is what we need to compute. So a lot of missing figures. So what we will do is, we will put the body of the cost sheet in place. Whatever values we have, we will put them. What we don't have, we will proceed anyways. Somewhere, something will happen, which will help us to complete the cost sheet. We have to basically work backwards. Yeah, so shall we start? So let's go to our classwork. So question number 4. So cost sheet of X Limited for the period of 1st September 2003 to 31st October 2003. Guys, these headings are very, very important. Please write the headings. Do not skip the headings. So, particulars. Do I need to put per unit? No, not required. No valuation. So, directly values have been given. So, amount in rupees. So, shall we start? So, what will come first? Opening stock of raw materials. So, opening stock of raw materials. How much would that be? 20,000 plus raw materials purchased 2,50,000. Next, any other cost to be added, carriage inwards or discount deducted? No, nothing is given. Minus closing stock of raw materials. Is this given to us? Not given. Leave it blank. What do I get? Direct material consumed or raw materials consumed. We can't calculate this because closing stock is not given. So there has to be some other way of doing it. So we will see. Leave it as it is. Now what do I do? Direct labor. Guys, how much is the direct labor? 2,22,250. Given, no? Direct expenses, anything given? Nothing is given. Not given. So now what do? I will get my prime cost. Prime cost given? Yes, prime cost is given. So at least if they've given that, we can calculate what is not calculated. How much? 3,97,000 750. Guys, now you need to work backwards. So how do you calculate backwards? How much will raw material consumed be? So consider this part to be like an equation. How raw material consumed plus direct labor is equal to prime cost. So now I need to calculate the value of raw material consumed. So take direct labor on the other side. So when you take it on the other side, what happens? It will become prime cost minus direct labor. So do it. So 397, 750 minus 222, 250. How much do you get? 1,75,500. Guys, correct? Cross verify once. Raw material consumed plus direct labor, when you add, you should get 397, 750. Yes. Now that we've got raw material consumed, can we calculate our closing stock of raw materials? Again, work backwards. Consider this to be an equation. Opening stock plus raw material minus closing stock gives me raw material consumed. I need to find out the value of closing stock. So take closing stock on the other side. So what will happen? Opening stock plus raw material minus raw material consumed will give me my closing stock of raw materials. How much do you get? 94,500. Guys, correct? Everyone. So this is my, which is this part A, right? So let's write part A and let's say balancing figure here. You can show this arrow pointing upwards, which means you have worked backwards. Now what do we do? Production overheads. So let's add. Guys, production overheads, what have they said? 40% of conversion costs. So working note number 1. Now if it is 40% of conversion cost, first I have to find out what is conversion cost. Only then I can calculate 40% of conversion cost. Yes or no? So let's calculate. Go to working note number 1. Working note number 1. Calculation of conversion costs. Calculation of conversion costs. Guys, what was conversion cost? Labor plus other expenses. So labor plus other expenses was the conversion cost. Correct? Labor is how much? 222, 250. Other expenses I don't know. Correct? Because that was 40% of conversion cost. And this is conversion cost. So don't I have an equation in the form of conversion cost? Yes or no? So let's calculate. So 250. I'll take this 40% on this side. So how much do I get? 60% or 0.6 conversion cost. Guys, correct? No? I'm taking it here. 40% is how much? 0.4. Here nothing is there, which means 1 is there. So 1 minus 0.4, 0.6 conversion cost. Guys, correct? Otherwise you take X and do it. But since you all don't like X, I used conversion cost. X meaning X, not your X. If any. Yes. Guys, okay. So how much is conversion cost? 222,250 divided by 0.6. 3 lakh 41 6.67. So I've got conversion cost. Right. Now can I calculate FOH? Easily 40% of this. So go there and write 40% of this. Tell me what is the figure? Shall I go to the problem now? Okay. So production overheads will be 40% of 3,70,416.67. So how much do you get? 160. We'll make it 167 in the cost sheet. So what is this, guys? This is your gross factory cost, correct? Because we have WIP to adjust. Tell me the total. So plus opening WIP. Guys, how much is the opening WIP? 40,000, which they have given, minus closing WIP. I don't know, so I will leave it blank. So what is this supposed to be? Net factory cost. Net factory cost. Is there any administration overhead? No. So if there is no administration overhead, can I say this is only my cost of production also? This is also my cost of production. I don't know. I cannot calculate till I calculate my closing WIP. So let's keep it on hold. To this, what should I add? Opening stock of finished goods. Guys, how much? 37,750. Now, cost of production plus opening stock of finished goods is nothing but my cost of goods available for sale, which they have given in the problem. So I will not directly minus closing stock of finished goods, because if I can first find out the values of those missing figures, I'd rather do that. So this is my cost of goods available for sale. Guys, so how much? 555, 775. So now work backwards. How much do you get your cost of production to be? 518025. Now work backwards. Closing WIP, how much? 67,892. So this is my balancing figure, correct? And this is part B. You can show this arrow mark upwards, denoting that you have worked backwards. Now what? So till now all my figures are balanced and all my missing figures are computed. All done till this stage. Now what do I do? Minus closing stock of finished goods. Guys, closing stock of finished goods, we don't know. We have to find out. So let's leave it blank. So what does this give me? Cost of goods sold. So again, I don't have any selling and distribution expenses. Nothing is given in the problem. So this is also my cost of sales. I have to compute it, not given in the problem. So we will leave it as it is. We will proceed. To this I add profit. So how do I calculate profit, guys? They've said In the problem, profit percentage was 30% on sales. So 30% cool. Sales also they have given to us. How much? 7,50,000. So how much do I get? 2,25,000 profit can be easily calculated. So this should ultimately give me sales which is 7,50,000. So now again we will work backwards. Calculate cost of goods sold, please. 5,25,000 and closing stock of finished goods 30,775. So this is again balancing figure and this is part C. I have calculated by working backwards. So how will you close this problem? In the end you will say A, value of goods inventory. Oh sorry, this A was goods inventory, so we have to interchange it. Please interchange it. Finished goods was A, correct? WIP was B and direct material was C. So please interchange it. So let's say value of goods inventory A, which is rupees 30,775. B, this is on 31st-10-2003. Value of WIP inventory on 31-10-2003. Guys, how much? 67,892. And the last one, value of direct materials inventory on 31-10-2003, 94,500. This is the answer to this particular problem. Guys, shall we move on? Are we all done? Okay. Next problem. This is the BAP of all problems. So this problem will throw light on the cost sheet format being split into per unit, units, total, which means you will be valuing your opening stock and closing stock. So let's read the question. Preparation of cost sheet. Shall we? Engineering Company Limited manufactures two types of products, Nano and Gizmo. What are the two products manufactured? Nano and Gizmo. The company's records show the following particulars for two products, for those products, for the month of May. So we are in the month of May, which means this is my cost period. Remember cost period? So this data has been furnished for the month of May. So let's see what is this data. Amount in rupees. They've given us direct materials, direct labor, production overheads, office overheads. Now, this data that they have given is for nano, or is it for gizmo, or is it for both? Both. Total direct materials were 38,10,000. Total direct labor was 20,10,000, and so on. So for both nano gizmo put together for the month of May, this is the expense. Okay, so let's see now what needs to be done. There was no WIP at the beginning or at the end of the month. So WIP opening closing does not exist. It was ascertained that what? Direct material cost per product for type nano was 160% of those of type gizmo. So they have established a relationship for direct material between nano and gizmo. Okay, now the thing is, they have given us the total expense when it comes to direct material. How much? 38,10,000. This is totally for nano and gizmo. Now if I ask you individually how much is it for nano or how much is it for gizmo, you won't be able to tell me. You have to figure that out. So to figure that out, they have given these clues here. So the first one they have said is the material cost per product for nano was 160% of that of gizmo. So we will have to figure out how to split that cost between nano and gizmo. Next, direct labor cost per product of type gizmo was 40% of those of type nano. So similarly, direct labor cost in total was given 20,10,000. Now how much for nano, how much for gizmo, we don't know. We will have to figure that out. Correct? So they have given a relationship here. So they've said gizmo was 40% of nano when it came to direct labor. Next, production overheads were absorbed based on direct labor cost, and office overheads were absorbed on the basis of factory cost. What is the meaning of the word absorbed? Can anybody tell me? What do you say or what do you mean when you say absorbed? It's a very typical costing terminology. Incurred, charged. So charged. So absorbed means to charge. Okay, now the thing is, guys, you will study this in overheads chapter. Okay, when it comes to overheads, we need to estimate the overheads and then charge them. Why? Why do we need to estimate the overheads and then charge them? Because overheads are indirect expenses. We cannot associate them directly with the product. They are indirect to the product altogether. Correct? So let's take an example. I'm just deviating a little so that you understand. Tomorrow when we do overheads, you will be able to understand this even better. So let's say I am a furniture manufacturer. Okay, I manufacture furniture. So I'm in the middle of my year now. Okay, so let's say my year is from Jan to December. At the end of December, I close my books and all of that. Okay, right now I am in the middle, which is March. Okay, now say I get an order for 100 tables. So a customer has told me that they want 100 tables to be manufactured by me, and they need a quote for it. So how much are those 100 tables going to cost? Now when it comes to direct expenses, that is your direct material, direct labor, direct other expenses, I can easily estimate them because they can be identified on a per unit basis. So I know that each table will require 4 legs. So 100 tables will require 400 legs. So I know the cost of one leg is this. So I can easily estimated. No tension. So direct expenses are not at all a problem. How will I estimate indirect expenses? Indirect expenses have to be estimated and charged. I have probably not even incurred these indirect expenses, correct? I'm in the month of March. At the end of December, I will know what my actual indirect expense ended up being. Correct? How much was my rent? How much was my power? How much were my salaries? Only at the end of December, when I'm closing my books, I will know, okay, this was what I was actually incurring during the entire year. In the month of March, I cannot know that because I have not yet incurred them fully. Correct? So what do? I have to estimate my indirect expenses. Correct? So indirect expenses are always absorbed, which means you estimate them and then you charge them to the product. So with indirect expenses or overheads, this problem of under/over absorption arises, which we will study under overheads chapter. Okay, so I just wanted to tell you what is the meaning of absorption. Absorption means to charge. Okay, so in this particular problem, how have they charged factory overheads and office overheads? On the basis of direct labor cost for FOH and on the basis of factory cost for AOH. Okay, so this is how expenses have been absorbed or expenses have been charged. So we will see what to do. Okay, next, selling and distribution overheads were rupees 2 per product sold for each type. So SNDOH easily given. How much? Rupees 2 per product sold. SND is always a function of sales. Guys, correct? Next, stock of finished goods on May 1st was 15,000 products at rupees 15 of type Nano and 20,000 products at rupees 8 of type Gizmo. What is this? Finished products bought. Units of what? Opening stock. They have given at the beginning of May, na? 1st May means opening stock. So how many units? 15,000 and 20,000 units of Nano Gizmo. Correct? And what is this? 15 rupees and 8 rupees? Exactly. It is the cost of production of the previous period. See, they have given this to you, which is correct. Because these units were manufactured in the previous period. Now you are utilizing them in this period, that is you're selling them in this period, so they have to be valued as per the previous period's cost of production. Suppose this was not given, then what would you have done? Use the current period's cost of production. Where is the current period's cost of production? You have to calculate. When we put the cost sheet in place, we will get the current period's cost of production. So this has already been given to us, so no problem. Production during the month of May was 2,70,000 products of type Nano and 3,30,000 products of type Gizmo. So they've given us the number of units of Nano and Gizmo which were manufactured. Out of May's output, 25,000 products of Nano and 40,000 products of Gizmo remained in stock on 31st May, which was valued at cost of production. So this is something that I already know. Correct, that it is valued at the current period's cost of production. So they have given us the closing stock. Now that we will have to value using current period's cost of production, which means we will need to classify our cost sheet into units, per unit and total columns. Guys, okay? So what are we supposed to do now? Prepare a statement showing cost of production for each type of product and the selling price per unit, and in total if the company desires a profit of 20% on selling price. So we are supposed to prepare the cost sheet, and in the cost sheet we are supposed to show the total profit and for each product also separately. That is for Nano how much, for Gizmo how much. Which means our cost sheet will be very, very wide and very, very long also. So many columns will come in the cost sheet because we have two products, nano, gizmo. Under nano, per unit, total number of units. Under gizmo, per unit, total number of units. And total, which is going to take into consideration the total of nano plus gizmo. That's why I said this is the BAP of all problems. So now, our first step in this problem is to split the costs, because they have given us total costs. Direct material total, direct labor total. But how much for nano, how much for gizmo? We have to figure that out. So we will first start with these working notes. Okay, so let's go to our classwork. Question number 5. So working note number 1. Calculation of material costs. Calculation of material costs. Guys, so can I say that material cost for nano plus material cost for gizmo is total material cost? Can I say that? Now guys, how do I calculate total material cost for nano? Number of units into per unit cost? Correct? So this, can I say, is number of units into per unit cost. This is for nano. Number of units into per unit cost. This is for gizmo. Yes or no? Now here, number of units. Which number of units? Which number of units? Production units. Cost sheet will always start with production units. That is, in manufacturing those units, what was the cost of material that I have incurred? So naturally it will be production units. Have they given me production units for nano gizmo? Yes, it is given. See there? See here, 2,70,000 and 3,30,000 already given, correct? So this we already have. So for nano also it's given, for gizmo also is given. But per unit cost, is it given? No, per unit cost is not given. But they have given us that direct material cost per product, which means per unit, for nano was 160% of that of gizmo. So can I assume that the cost per unit of gizmo is X? So for that of nano will be 160% of X. Yes or no? Yes. So let's go back here. Let cost per unit of gizmo be X. Gizmo, no. Because nano is 160% of gizmo. So gizmo is X. Hence, cost per unit of nano will be how much? 160% of X, which is 1.6 X. Guys, now we'll substitute. So total number of units of nano, how much? How much total number of units? 2,70,000. Per unit cost of nano? 1.6x. You calculate it. Plus how many units for gizmo? 3,20,000. 3,30,000. Per unit for gizmo? X. Yes. Gives me total material cost. How much? 38,10,000, which they have given in the problem. Now solve for X. How much do you get? 432 plus 330. So 7,62,000 X equals 38,10,000. Guys, correct? No. So how much is X? 5 rupees per unit. But I need to find out the material cost of nano and gizmo. That is that 38,10,000 has to be split. Yes or no? So material cost for nano. Guys, how much? 2,70,000 into 1.6 into 5. So how much you get? I'm just substituting for nano and gizmo separately. 21,60,000 for gizmo. So 3,30,000 into 5. 16,50,000. Correct? So these figures will go to my cost sheet when I start preparing my cost sheet. Guys, so this is one method of splitting the cost. There is one more method of splitting the cost. You follow whichever method you're comfortable with. Okay, that is the ratio method. Okay, ratio method. I personally like that method more than this because that is quicker. Shall we proceed? So now working note number 2. Calculation of labor cost. Calculation of labor cost. So total labor cost. Guys, how much is the labor cost? 20,10,000. Right? So now before that, what have they given? Direct labor cost per product or per unit of gizmo was 40% of nano. So gizmo is 40% of nano. So which will be X? Nano will be X. So now we will assume that nano is X, gizmo is 40% of X. Correct? So let labor cost per unit of nano be X. Labor cost per unit of gizmo will be 40% of X, which is 0.4X. Correct? So total labor cost will be what? Number of units into labor cost per unit. Into labor cost per unit. Correct? So for nano, number of units are how much? Number of units for nano? Same production units, no? So 2,70,000 units into cost per unit. You have assumed it to be X. So this is 2,70,000 X. Similarly for gizmo, 3,30,000 units into per unit 0.4X. You calculated it here. So 0.4X, how much do you get? 1,32,000 X. So simple guys, divide 20 lakh 10,000 in the ratio of 2 lakh 70,000 X is to 1 lakh 32,000 X. So what do you get? So ratio will be so you get 270 is to 132. Guys, correct? No? So now divide it. So 20 lakh 10,000 divided between Nano and Gizmo, which is 270 is to 132. How much do you get? 13 lakh 50,000. And here you get how much? 6 lakh 60,000. You know how to divide by ratio, no? Using ratio 270 plus 132, 402. So 20 lakh 10,000 into 270 divided by total 402. And here it will be 20 lakh 10,000 into 132 divided by 402. Or you do X method, left to you. How will you do X method here? 2,70,000 X plus 1,32,000 X gives you 20 lakh 10,000. You solve for X, then you will get 5 rupees. If you get 5 rupees, then you calculate for Nano separately, Gizmo separately. How Nano? 2,70,000 into 5, and for Gizmo 3,30,000 into 0.4 into 5. You will get 6,60,000. Same costs. You can follow whichever method you want. I have done both so that you can pick whatever you want. You want to do both methods in the same problem? Please go ahead. Nobody is going to stop you. For one part you can do X method, for one part you can do ratio method like the way I have done. No problems with that. Guys, okay? You can draw this diagram like this. The more the diagrams, the more the representations in your paper, the better your paper looks. So absolutely no problem. Draw as many charts as possible. Can I proceed? So we have split material cost, we have split labor cost. Now what is left? Production overheads. What have they said about production overheads? Were absorbed based on direct labor cost. So guys, we need to figure out the relationship between production overheads and direct labor cost. So how do we find out? We will find out what percentage of direct labor are production overheads. Okay, so first let's find out what percentage of what direct labor is production overheads. So how do we find that out? So working note number 3, calculation of production overheads. Calculation of production overheads. So first we need to determine the relationship between direct labor and production overheads. How do we determine that relationship? Calculate the percentage of POH on direct labor. So how do we calculate? Percentage of POH on direct labor will be POH by direct labor into 100. Because I want to find out what percentage of direct labor was factory overheads or production overheads. So guys, POH was how much? Total. How much was the total POH? 6,03,000. Direct labor was how much? 20,10,000. So what percentage is 6,03,000 on 20,10,000? 30%. So in other words, what am I trying to say? I'm trying to say that factory overheads were 30% of direct wages or direct labor. So I have direct labor here, which I have calculated for Nano and Gizmo. on total, my POH is 30% of total direct labor. So individually, can I not calculate? I know that POH will be 30% of direct labor. For Nano, direct labor was 13,50,000. So how much will POH be? 30% of 13,50,000. Similarly, I know for Gizmo, my direct labor was 6,60,000. So how much will POH be? 6,60,000 into 30%. Because POH is 30% of direct labor. I have established that relationship here. Guys, correct? No. So now what? POH for Nano, Gizmo, 30% of direct labor. So how much was the direct labor for Nano? Direct labor for Nano? 13,50,000. So how much do you get? 4,05,000. And for Gizmo, it is 30% of direct labor for Gizmo. Direct labor for Gizmo was 6,60,000. 1,98,000. Guys, add up this 4,05,000 plus 1,98,000. Do you get your total POH? Yes. 6,03,000. Now one more is left. Office overheads. But what have they said about office overheads, guys? They've said that office overheads were absorbed on the basis of factory cost. But factory cost I don't have only. I have to first show factory cost in my cost sheet. From my cost sheet only I'll have to determine factory cost. So what we'll do is we'll leave some space and then we will move on to our cost sheet. Once I get factory cost, I will go back to working note number 4, finish it and then continue with my cost sheet. Guys, is it okay? So what do? Leave some space. Let's write working note number 4, calculation of office overheads. Leave this because first I need to establish the relationship between office overheads and factory cost and then I will proceed. So factory cost I don't know. I will now go to my cost sheet directly. So leave some space, about 5-6 lines. So shall we move to the cost sheet? Okay, let's move to the cost sheet. So let's write down cost sheet for engineering company limited, for engineering company limited for the month of May. Guys, correct? For the month of May. Now we will put our cost sheet in place. Particulars. Total. We have Nano. We have Gizmo. Now units per unit total, units per unit total. So units per unit total, units per unit total. Correct, we have to establish the value of stock. So units per unit total will come. Yes or no? Yes. So how do I start? Direct material, right? So direct material. Guys, how much was total? 38 lakhs, 10,000. But I have to split it between Nano and Gizmo. Didn't I already split it? Do I have to calculate anything? No, no. So this is working note number 1. Connect it, please. So how many units for Nano, guys? 2,70,000. How many units for Gizmo? 3,30,000. Nano ka total value was how much, which we calculated? 21 lakhs 60,000. Gizmo total was 16,50,000. Per unit we calculated at 8. First 8 will come. Nano will be 8. Okay, yeah. Gizmo was X, no? But Nano was 1.6x. So 1.x was per unit, which is 5 rupees. Like that also you can see, or you just divide 2160 by 2,70,000, you will get the same answer. That also you can do. So Nano should be 1.6x. 1.6 into 5 rupees. So that is 8. So when you divide 21,60,000 divided by 2,70,000 also, you should get 8 rupees. Then you are right. Guys, okay? Next. Direct labor. Working note number 2. So this is 20 lakh 10,000. Now for each section only you write the number of units, otherwise you will get confused. So for each section means prime cost, factory cost, cost of production. That is each section when you are getting the total. So for each section only you write number of units. It is understood those number of units are for all the items under that section. So no need to write 2,70,000, 3,30,000. If you want to write also you can write, it's not wrong. But in order to avoid confusion, no need to write. It's understood. So how much did I get the total to be, guys? Under labor? 13,50,000 and 6,60,000. Per unit? 5 and 40% of 5 rupees. How much? 2. So even if you divide it otherwise, how? 13,50,000 divided by how many units? 2,70,000. That 2,70,000 is for the full section. You should get 5 rupees. And 6,60,000 divided by 3,30,000, you should get 2 rupees. Guys, correct? Next. Anything else? Any direct expenses? Nothing. So let's add this up. What do I get? This is my prime cost. Total how much? So now for this section, separately I'm writing the units. 2,70,000 units, 3,30,000 units. Like I said, cost sheet always starts off with the production units. So how much do you get, guys, per unit? 13 rupees. And total for Nano will be how much? 35,10,000. And for Gizmo, how much will you get? 7 rupees. And total will be 23,10,000. Guys, correct? Simple till now. Now what do I do? Factory overheads or production overheads. Working note number 3. Total was 6,03,000. No need to write units. It's understood it is for this section till I arrive at factory cost. Correct? So how much did I get the factory overheads for Nano and Gizmo? 4,05,000. 1,98,000 per unit. 1.5 0.6. Guys, how do you get 1.5 and 0.6? 4,05,000 divided by total number of units, which is 2,70,000. And here 1,98,000 divided by 3,30,000, you will get 0.6. Okay. Any opening, closing WIP? No. So let's add this up. This is my factory cost. How much? How much do you get? 64,23,000. Again for this section, 2,70,000 and 3,30,000. 14.5, 7.6 per unit. How much total? 39,15,000 and 25 lakhs 8,000. Guys, okay? Till here, no tension. Now what? I have to add office overheads. Now, office overheads will be working note number 4. Remember, we had left space because we didn't have factory cost. Yes or no? So, first, what did they say? They said that office overheads were absorbed or charged on the basis of factory cost, which means we have to calculate what percentage of factory cost was office overheads, just like the way we did for factory overheads. But factory overheads were calculated on direct labor. Office overheads are calculated on factory cost. So let's calculate. So percentage of office overheads on factory cost. How? Total office overheads divided by total factory cost into 100. Guys, total office overheads how much? 6,42,300 divided by total factory cost. How much was the total factory cost you calculated? 64,23,000. Right? So into 100, how much do you get? Which means the relationship between office overheads and factory cost is that office overheads are 10% of factory cost. So now can we easily calculate for both my products? So AOH for Nano and Gizmo, 10% of factory cost. For Nano, what is the factory cost you calculated? Tell me. 39,15,000. So 39,15,000. Yes or no? And for Gizmo, how much was the factory cost? See your cost sheet. 25,08,000. So 25,08,000. Correct? Can I move on? Have you all completed? So we have split all our expenses, all done. So can you please give me the figures? Please give me the figures. Office overheads 42,300. No need to write number of units. Tell me the total. 39,15,000 250800 per unit. How do we get 1.45? You can either take 14.5 into 10%, correct? That also the same, no? It doesn't matter. We know that office overheads are 10% of factory cost. So per unit factory cost is 14.5 into 10%, 1.45. Either we can do that, or you calculate 391500 divided by 2,70,000. You will still get the same answer, 1.45. Guys, is it okay? Similarly, here you will get 0.76. So so what is this? Cost of production. How much? 70 lakh 65,300. For this section, 2,70,000 and 3,30,000 per unit. 15.95 total. 43,06,500 for Gizmo per unit. 8.36 total. 2758 800. 2758 800. Correct? Calculated cost of production. Now what do I do? Opening and closing stock of finished goods. That we have to adjust. That's why we are doing all this, right? So first, opening stock of finished goods. Now total column we cannot fill now because first we need to value the opening stock of finished goods for Nano Gizmo. Once we get the value, then we'll fill the total column. What can we fill? The units. Fill the units. For Nano, how many opening stock units did I have? 15,000 given in the problem. Yes. And for Gizmo, how many opening stock units? 20,000. Guys, at what value? 15 rupees for Nano and Gizmo 8 rupees. Value it. So per unit it is 15 rupees. Total will be 15,000 into 15. 2,25,000. And this will be 1,60,000. Correct. Now minus closing stock of finished goods. Now you can add up the total for opening and put it in the total column. How much? 225 plus 1,60,000. So 385. Guys, closing stock, how many units given? Again, total we can't ascertain till we have the valuation in hand. So closing stock units, how many? Given already 25,000. Please put it in brackets, otherwise you will forget. You have to minus, and 40,000. At what value? Cost of production. Which cost of production? Current period, which is what? For Nano it is 15.95. Cost of production current period 15.95. And for Gizmo it is 8.36. So 15.95, 8.36. Value it. 25,000 into 15.95. 398 in brackets please, and 334 400. Total 733 150 minus. So this is cost of goods sold. Cost of goods sold. How much, guys, total? 67, 71, 17, okay. 17, 150. Number of units. What number of units are these? What units are these? Sales units. Sales units of nano. So production units were 2,70,000. From the previous period, 15,000 units more came. So 2,70,000 plus 15,000 was what was available to me to sell. But how many did I sell? Only 2,60,000, because the remaining 25,000 units were lying in stock. Guys, correct? No? Now per unit don't calculate. Per unit don't calculate, because per unit value will be different. Tell me what is the total? 41, 32, 750. This is the total. Now how will you calculate per unit? Total divided by number of units. So calculate, tell me. 15.895. So can I say 15.9? 15.9. Here 350 minus 40, 310. 3,10,000 units, which is the number of units of Gizmo which were sold in this particular period, the sales units. Yes or no? Total 84 per unit 8.34. How? 2584 400 divided by 3,10,000. Now what do I do? Selling and distribution. Guys, what have they said? So they've said that rupees 2 was the selling expense per unit sold, which means selling expenses are always a function of sales. So 2 rupees, 2 rupees. It is the same for Nano and Gizmo, right? So can you tell me what is the total cost? Selling and distribution per unit is 2. So total will be how much? 2 into production units or sales units? Sales units, which is 2,60,000 units. So how much? 5,20,000. And similarly here, 6,20,000. 3,10,000 into 2 rupees. So this will be my cost of sales. Guys, total will be how much? Didn't calculate the total. 11,40,000. So tell me the total, please. 78, 57, 150 for 2,60,000 units which was sold of Nano. Per unit cost is 17.9. Can you tell me the total, please? 46, 52, 750. 3,10,000 units of Gizmo valued at 10.34 rupees. Cost of sales per unit. Total? 3204 400 plus profit. Now profit they have not given, no. They've said profit is 20% on selling price. But I don't have the selling price. So I don't have no selling price. I'll just write the units. Selling price I don't have, but they have said that profit is 20% on selling price. So guys, what we are going to do is convert profit on sales to profit on cost. So how do we do that? So for those who don't know, only in this problem, I will show you how to do it. Okay. So here they have said profit was how much? 20% on selling price. Correct? So whatever they've given, whether profit was percentage on whatever they've given, whether cost or selling price, that will become 100. Okay. So here what will become 100? Profit is calculated on selling price. So let selling price be 100. So profit will be how much? 20. 20% on 100 is 20. So cost will be how much? How 80? Selling price minus profit gives me cost. So if selling price is 100, profit is 20, cost will be 80. So now I want you to calculate the profit on cost. So profit on cost will be what? 20 profit on cost. Cost is what? 80 into 100. So how much do you get? 25%. So it means to say 20% on selling price is 25% on cost price. So for those who don't know how to convert it. Guys, okay. Similarly, this was one case. Case 2. Suppose they had given profit was 20% on cost. So now how will you do it? Since it's on cost, what will be 100? Cost will be 100. So cost is 100. Profit is 20% on cost. So 20% on 100. 20. Selling price is 120. Now I want you to find out profit on selling price. So profit on selling price. Selling price is how much? 120 into 100. How much do you get? 1/6. So 16.67. So what is 20% on cost will be 16.67% on sales. Is it okay? So this is how you convert between cost to selling price and selling price to cost. So here in this problem, what have they given? 20% on selling price, and selling price is not there. So we convert it to cost. So we get 25% on cost. So let's write here. %25 on cost. So now convert it. %25 on cost is how much? Total 19 lakh 64,287 point something 0.5. Okay, 287. This do want per unit and total, please. For nano 4.47 475. We'll round off, no? 4.47. Then total 11 lakh 63 187.5. Then 3,10,000, same, we know that, no need to write it again. 10.34 into 25%, how much? 2.585. 2.58 we'll keep it. We are rounding off to 2 decimal places. Total how much? 80. 1%. 1100. So now add up total. Sales, how much do you get? $98 lakh 21,000 438 437.5. 437 also you can keep. हाँ 58 lakh 938 per unit. How much? 22.37. Okay. For Gizmo per unit 12.92. Total 82. Okay. 92. Are you decide? No. Why you also confused? 9282. 92. Total 40 lakhs. Guys, are we done? We'll move on. So now the big problems have come to an end. We've covered whatever was possible to cover. Okay. Obviously, in the regular classes, we do so many more problems. We solve almost more than 35 problems. Okay, but that's not possible in 5 days. So all the important concepts we have discussed: the concept of missing figures, when there are stocks given, how to value it, and if abnormal loss is given, what to do with it. Correct. Now certain small adjustments which may trouble you in bigger problems. Okay, so that is the next part, which is important adjustments. So let's quickly see these important adjustments and then I'll give you a break. Okay, so see this. Case 1, treatment of semi-variable overheads. Okay, so now when you're preparing your cost sheet, if semi-variable overheads come into the picture, what do you mean by semi-variable? It's partly fixed, partly variable. Correct. So if we have semi-variable overheads, then how to treat them? Okay, so let's read the problem and then understand. So semi-variable overheads are rupees 3 lakh per annum at 50% capacity and an extra amount of 60,000 rupees for every 20% increase in capacity or part thereof. So what did they say? Up to 50% capacity, 3 lakh rupees. Please circle the words per annum has been given. So up to 50%, whether you are at 30%, 40%, 50%, you have to incur 3 lakh rupees per annum. Okay. An extra amount of 60,000 rupees for every 20% increase in capacity. Okay, till here it would have made sense, which means what? From 50 to 70 if I'm moving to, which is an increase by 20%. So along with 3 lakh rupees, I will also incur 60%, 60,000 rupees per annum. Again, please, please add here per annum. It's missing actually. Per annum. Correct. But they have said 20% increase in capacity or part thereof, which means not only 20% increase, but any part of that 20% also you will have to pay an additional overheads of 60,000, which means what? So if I am at 50% capacity and say I am moving to 65% capacity, how much have I increased by? 15%. Is 15% part of 20%? Yes. Which means though I have not moved fully by 20%, but still, will this additional overhead come? Yes. Why? Because of these words, part thereof. If part thereof was not there, then what would you have done? Only if you are moving by 20%, you would have taken it. Or if they would have said something like proportionate. So for 20%, if it is 60,000, then for 15%, how much will it be? That they would have given to you in the problem, then you would have taken. But here, what have they said? Part thereof. So even if you are not moving by full 20%, by whatever capacity you are moving, if it is part of 20%, then you have to incur that additional overhead of 60,000. So suppose I was at 50% capacity, I am moving to 57% capacity. Will the 60,000 rupees come? Yes, because 7% is part of 20%. So part thereof. Okay. The factory works at 60% capacity for the first 3 months and 80% capacity for the remaining months. So my factory is working at 2 different levels of capacity. First level of capacity is 60% for 3 months only. And the remaining months, how many remaining months? 9 months. I'm working at 80% capacity. Find the total amount of semi-variable overheads. So shall we? So a bigger question like this could have a small adjustment on semi-variable overheads like this. So if this comes, you can tackle the bigger question now because you know how to solve the cost sheet. But this adjustment may have troubled you, but now it won't anymore. So you can join both and solve your question easily. Is it okay, guys? That was the point of putting these adjustments in place. So let's solve. Calculation of semi-variable overheads. Calculation of semi-variable overheads. So particulars. So how do I divide my calculation? 3 months and remaining months 9 months. So for 3 months and 9 months, capacity for 3 months was 60%. Capacity for 9 months was 80%. Correct? Now what do I do? So first, my normal, regular semi-variable overhead. So let's say semi-variable overhead. Guys, up to what capacity have they said? Up to 50% capacity, I have to incur 3 lakh rupees. So I have operated at 60% capacity, which means this will come, correct? So should I take 3 lakh? No. I made you circle that per annum. 3 lakh is per annum. Please read the question. That's why I told you cost period is very, very important. 3 lakh is what they have given per annum. This is only for 3 months, guys. So 3 lakhs into 3 by 12. Only for a period of 3 months. So how much do you get? 75,000. But I am operating at what capacity? 60% capacity, which means up to 50 I have normal overhead, your normal semi-variable overhead. Additional overhead will come if my capacity is increasing by 20% or part thereof. So 20% means 70%. But where have I increased my capacity to? 60%. So for 60% will this additional overhead come? Yes. Why? Because it is part of 20%. Part thereof. Those 2 words, part thereof, have changed the dynamics of this question. So additional semi-variable overheads. Guys, how much? How much is the additional overhead? 60,000. Again, 60,000 is per annum. This is for 3 months. So into 3 by 12. So how much do you get? 15,000. So total semi-variable overhead 90,000. Now 9 months. What will you do, guys, for 9 months? 9 months I'm working at 80% capacity. So 60%, 80%, sorry, 50%. So I'm working at 80% capacity. So 50% to 70% is 20% increase, which means 60,000 rupees will come once. But 70% to 80% is not 20% increase, it is 10% increase, but part thereof. So how many times will 60,000 come? 2 times. One for this and one for this part thereof. Guys, yes or no? So now, first for 80,000, I have to take my regular semi-variable overhead up to 50%, which is what? 3 lakh into 9 by 12. So how much do you get? 2,25,000. Correct? Additional overhead 50 to 70, 120%, which means 160,000. 70 to 90 it should have been, but I am increasing from 70 to 80. That 10% is part thereof. So one more 60,000 will come. So totally how many 60,000s? 260,000s. So 60,000 into 2, but this is per annum into 9 by 12. So how much do you get? 90,000. So total how much? 3,15,000. 3,15,000. You can draw these diagrams for better understanding. Guys, okay, shall we move on? Next one, case 2. Impact on production due to change in labor efficiency. So sometimes they give you costs and then they also ask you to figure out what happens to those costs if labor efficiency is changing up and down. So let's analyze what happens to costs when labor efficiency is changing. Very, very easy. Okay, just understand what is happening and then it will automatically come to you. So the production in the year has increased by 70%. Okay, but the labor efficiency has decreased by 10%. So what happened to the efficiency of labor? It decreased by 10%. Labor efficiency decreasing, is that a good thing or a bad thing? Obviously it's a bad thing because they are not as efficient as they were before, which means they will produce lesser number of units, as a result of which either my production will be less, or if they are producing the same number of units, what will happen? They will take more time to produce, which means I have to pay them more. So ultimately, if labor efficiency is decreasing, my cost will be more. So that is not a good thing for me. Yes or no? So labor efficiency is decreased by 10%. Material price has fallen by 6%. The labor cost and material price in the previous year was 40 lakh rupees and 37 lakh rupees respectively. So they've given us the last year's prices. They've told us what has happened to the prices in this particular period, and also labor efficiency has decreased. So what are we supposed to do? Find out the current period's cost. So again, this has been picked up from a problem. So in that problem, this was the only adjustment. Other adjustments were something that you can do on your own. Very, very simple. Correct? So they had given things like variable overheads increased by 10%, fixed overheads remained the same, calculate the total cost and the sales value. They had given the profit percentage. So all that you can do, but this was the only adjustment, the tricky adjustment. So that's why I've put this here. So now what happened? First of all, production has increased by 70%. Correct? Material prices changed and labor prices changed. First, we will tackle material prices. So how do we tackle, guys? Let's write it here only. You write it in your classwork. Guys, in the previous period, what was the material price given to us? 37 lakh. In this period, first of all, my production increased by 70%, which means what? Material usage also would have increased by 70%, which means my material cost also will increase by 70%. So, into 170% or plus 70%, same thing. Guys, yes or no? Yes, into 170% or plus 70%. So, how much do you get? 62 lakh 90,000. But in this period, material price has gone down by 6%. So, 62 lakh 90,000 minus 6% or 62 lakh 90,000 into 94%. So, how much do you get? 59 lakh 12,600. So you can directly do it also if you are comfortable. How? 37 lakhs into 170% because of increase in production. So material usage will increase, but material price is decreasing by 6%. So it will no longer be 100%, it will be 94%. So I have shown it, or plus 100% minus 6%. You will get the same answer. Guys, okay? So material price is okay. Now what do I have to do? Labor price, labor rates. So labor. So labor, how much was it in the previous period? 40 lakhs. Correct? In the previous period, labor was 40 lakhs. Then what? Now that the production has increased by 70%, which means labor charges also will increase by 70%. That is a given. It is understood. You don't have to be told that. So, first of all, increase this by 70%. How much do I get? Or into 170%, whatever. 68 lakh. Correct? 68 lakh because of increase in production. Now, guys, let's say the laborers were supposed to manufacture 100 units. Okay, they were supposed to manufacture 100 units. But because of decrease in efficiency, how many units have they manufactured? 90. So 100 minus 10%, which is 90. So actually speaking, this 68 lakh rupees were supposed to be for 100 units. But in that same time, which adds up to 68 lakh rupees, these guys have manufactured only 90 units. But ultimately, I need 100 units manufactured, na? So how much will I need to pay them for 100 units? How much will I need to be paying them for 100 units? 68 lakhs, they ended up manufacturing only 90 units, but I ultimately want 100 units to be manufactured. So if 68 lakhs is for 90 units, for 100 units, how much will it be? So what do you get? 68 lakhs into 100 by 90. So how much do you get? 75? Guys, correct? Did you all understand how efficiency changes your labor cost? So 68 lakh, they had to manufacture 100 units as per their efficiency. They have not given the number of units. But so we are assuming it to be 100 units. But their efficiency was decreased by 10%, which means they will not manufacture 100 units, they will manufacture 90 units, which means this 68 lakhs I would have paid for 90 units. But I have to manufacture 100 units because that is what my cost sheet is showing. Cost sheet is for 100 units. Material also I have shown for 100 units. So labor also have to show for 100 units. 68 lakhs, 90 units. 100 units, how much? So that's what I have calculated here. So you get 75 lakhs 55, 555.55. That's what I said. If your efficiency decreases, if the labor efficiency decreases, it is bad. Why? Because cost will increase. Yes or no? Either they will not manufacture the number of units required to be manufactured. So I have to compromise on my number of units. Or if they are manufacturing the number of units required, they will take more time. So if they take more time, I have to pay them more. Which is what is happening here. I cannot leave them at 90 units. I want them to manufacture 100 units. Which means I have to pay them more. Because they'll take more time. So it's not 68 lakhs. It is 75 lakhs. Odd. Guys, did you all understand? Everybody. So this was one adjustment from one particular problem. Have you all made a note of this? Can we move on? Sure? Okay. Last problem. Now again, this problem is based on linear equations and simultaneous equations. This question has come several times in the past in the examination. So you need to know it. I have condensed the question. In the actual question is slightly bigger, but the method of calculation is the same. But I have condensed it, given you certain things which you can calculate. Like for example, in the question which is actually given, prime cost was not given. Prime cost had to be calculated. That you can calculate. Direct material plus direct labor. That is given in the problem. You just have to add it and get the prime cost. So that I have already given to you. We are going to calculate what we don't know. Okay. So in this particular problem, see this. Estimation of overheads as a percentage of costs. So here we need to calculate how to absorb our overheads. So what do we do? Find factory overhead percentage and administration overhead percentage from the following data. So guys, if you remember in the previous problem, your nano gizmo problem, FOH percentage also we found out, correct? On what basis did we find out? Direct wages. So FOH will be absorbed as a percentage of direct wages. Since nothing is given in the problem, this is what we will assume. And we will write a note. If they have given you something in the problem, please follow what they have given. Okay. And AOH percentage also we found in the previous problem. On what basis was it absorbed? Factory cost. So this will also be factory cost. We will write a note. Generally, this is what we do. If they give you something else, you do that something else. No problem. Is it okay? Since the question is silent, we will follow this only. So now we have to find out what percentage of direct wages was factory overheads and what percentage of factory cost was AOH. That percentage needs to be found out. So this particular product is manufacturing particular organization is manufacturing two products, product A and product B. So prime cost is given for both the products. Cost of sales is given for both the products. What is cost of sales? Total cost. Correct? And direct wages have been given for both my products A and B. Okay? And we will assume that both the products will be absorbed using the same percentage, since nothing has been specified. So how do we calculate? So here for percentage of FOH on direct wages, we will take that to be X, and percentage of AOH on factory cost, we will take that to be Y, and then we will solve it. Okay, so let's see how the question looks. Let's go to our classwork. So please write F case 3. So let percentage of factory overhead on direct wages be X. Let percentage of AOH on factory cost be Y. Correct? I don't know the percentage and that's what I need to find out. So now let me put my cost sheet together. Okay. So cost sheet for so and so for the period so and so. Nothing is given. So I will just write this and leave it. So particulars, product A, product B. So how do I start my cost sheet, guys? Direct material, direct wages gives me prime cost. Wages are given, material is not given. So I will directly start with prime cost. So prime cost, guys, how much prime cost? 96,000 and 67,500. Correct? To this, what do I do? Add factory overheads. But factory overheads, I don't have, no. I just know that they are X% on wages. So I'll take that. So what are wages for product A? 42,000. If I had the percentage, I would have applied it. Let's say the percentage was 10%. Then what would you have told me? Then you would have said, ma'am, 42,000 is given into 10%, 4,200. But do I have percentage here? No. I've assumed it to be X. So I'll take it as X. So 42,000 X. Correct? 42,000 X. For product B, what will it be? 30,000 X. FOH is X. We are adding FOH. I didn't say that FOH for product A is X and FOH for product B is Y. I just said FOH percentage is X. So for both it will be X only. Yes or no? So this will be 30,000 into X. I don't know the percentage. So what do I get, guys? What is this called? Factory cost 96,000 plus 42,000 X. I can't add up. Correct? I cannot add this. And 67,500 plus 30,000 X. So now to factory cost, what do I do? Add admin overheads. So what are the admin overheads? I don't know, but I know that there are percentage of factory cost. What percentage? Y percentage. So Y percent into factory cost. What is my factory cost? 96,000 plus 42,000 X. Correct? So 96,000 plus 42,000 X into Y, if this were a number. Correct? Similarly, for product B, it will be 67,500 plus 30,000 X into Y, if this were a number. Correct? I don't know. Now what? Now I get cost of production, but there is no opening or closing stock of finished goods, which means this is only my cost of goods sold and there is no selling and distribution overhead. So this is only my cost of sales. This is only my cost of sales. So now how do I write this? See here, 96,000 plus 42,000x plus 96,000 plus 42,000x into y. All are different variables. No, I cannot add anything. So I've just written it as it is. 4 different variables. I've written 4 different variables. Okay. Here 67,500 plus 30,000x plus 67,500 plus 30,000x into y. Guys, correct? Also, if you see in the problem, they have given me my cost of sales, which is what? 1,51,500 and 1,06,875. So they've given me the value of cost of sales. So don't I have 2 equations? I know that this is nothing but 151,500 and this is nothing but 1,06,875. So I've got 2 equations. So shall I put the 2 equations in place? Yes. So let's put it in place. So 96,000 plus 42,000x plus 96,000 plus 42,000x into y is 151,500. Guys, correct? No? Now, how do I solve this? Should I open the brackets? Should I multiply 96,000 into y and 42,000x into y? Guys, don't do that. Easier way. Take 96,000 plus 42,000x common. So when I remove this particular expression as common, what is left here? 1. And what is left in the second one? Here, y. So 1 plus y. Yes or no? Don't open it. If you open it, then simultaneous equations. If you do it like this, linear equations. Which is easier? Linear equations. So you take this out common. What are you left with? 1 in this expression. Correct? What are you left with here? Y. Yes or no? That's why I've put it in brackets. So what do I get? 151,500. So what I'm going to do is 1 plus y is equal to 151,500. I'll take this down. I'll take this expression down. Okay, because I want the equation in terms of 1 plus y. So 96,000 plus 42,000x. This is equation 1. This is equation 1. Guys, correct? So I've got my equation 1, but I have not yet touched my equation 2. Which was equation 2? 67,500 plus 30,000y. Sorry, 30,000 x plus 67,500 plus 30,000 x into y. Correct? 106,875. So what do I do? Same thing. 67,500 plus 30,000x. Take it common. What am I left with? 1 plus y. 106,875. So again I want this equation in terms of 1 plus y. So 1 plus y. 106,875 divided by 67,500 plus 30,000x. I'll take it down. This is equation 2. So what can I do now? I have 2 equations. I equate them because if the LHS is equal, then I can equate the RHS. So 1 plus y, both have. So can I say that equation 1 is equal to equation 2? So 151,500 divided by 96,000 plus 42,000x is equal to 106,875 divided by 67,500 plus 30,000x. Guys, correct? Correct? Now we'll reduce these numbers because these numbers are big. Correct? So how can you reduce these numbers? I'll bring this here. So this goes up here. Guys, correct? No? Correct? No? Or if you don't know this, if you know this, then here only directly you can reduce. No problem. It's up to you. I'm showing you the step. Correct? I've transferred this here. I've brought this down. So first we'll reduce this particular fraction. So if we divide it by 75, how much do we get? Divided by 75. So I get this becomes 2020, whereas 106,875 divided by 75 I get 1425. So I can further subdivide it. Correct? So if I further subdivide it by, say, let's divide it by 50. So 2020 divided by 50, 40.4, and similarly 1425 divided by 50, 28.5. So this has been reduced drastically. So I'll use these figures. So 40.4 into 67,500 plus 30,000x, cross multiplication, 96,000 plus 42,000x into 28.5. So now let me open the brackets. 67,500 into 40.4, 27,000 plus 30,000 into 40.4, 12,000x. Similarly 28.5 into 96,000, 2736,000. 42,000 into 28.5, 1197,000x. So now I'm going to shift all the x's together. So 12,12,000x minus 1197,000x, 2736,000 minus 2727,000. So 1212,000 minus 1197,000 gives me 15,000x. 2736,000 minus 2727,000 gives me 9,000. So x I will get as 9,000 divided by 15,000 gives me 0.6 or 60%. 0.6 or 60%. So now substituting the value of x in equation. Which equation do we take? We can take equation 2. So 1 plus y is equal to 106,875 divided by 67,500 plus 30,000, x is 0.6. So how much do I get? 1 plus y is equal to 106,875, 30,000 into 0.6 plus 67,500, 55,500. So 1 plus y is equal to 55,500 1 point 1 point sorry, this is not 30,000 and 2.6 plus 67,500. This is 85,500, guys. So how much do I get? 06875 divided by 85,500. I get 1.25. So y ka value will be 1.25 minus 1, which is 0.25 or 25%. Please check. So with this we finish our chapter 1, and now we will move on to chapter 2, which is material. Okay guys, so now we will move on to the next chapter, which is our material chapter. Okay, coming to this particular chapter, again we are going to encounter a lot of concepts, small concepts. We are going to be solving a lot of problems in this, lot of adjustment problems, lot of regular big problems, because there are too many concepts to tackle. Okay, so when we look at material, this chapter has a lot of significance and importance, because this raw material which is used in the manufacturing process, we need to exercise a good system of control when it comes to raw material. Why? Because of many reasons. Okay, what could those reasons be? Okay, first, when you see your final product, most of the final product, the cost which is associated with your final product, most of it is raw material cost. Correct? So this raw material will, the kind of raw material that you're using will determine what the quality of your product will be. Correct? So quality of the final product will totally depend on your raw material. Correct? Next, exercising a good system of control is very important in order to reduce wastage. Okay, now if we know that certain units of raw material are required to manufacture the finished product, but if you are not using that many number of units, you're using more, that means you're wasting somewhere. Correct? And if you're wasting, it's only going to increase our costs. So this system is very important to be put in place so that we can reduce our raw material wastage. Next, prices. So raw material prices should be minimum. So you should do your research properly. You know, figure out who the suppliers are in the market, what their reputation is, what their quality is, how they are selling their material. Okay, what are the prices which have been put in place by the suppliers to sell in the market. So you obviously have to ensure that you are buying good quality material, right? But at the same time, the prices should be minimal. You should not compromise on the quality also, but at the same time ensure that your raw material prices are less. So for that you need to do some analysis. For that you need to have a system in place. Correct? Next, raw material system should be such that your production flow is not disrupted. So at any point in time, you have a production schedule in place. So your raw material should be available readily. There should never be a situation that, oh, I have to produce now and I don't have raw material. That will hamper your operations completely. So again, all of that will happen only if you have a system in place. So if you see, everything is narrowing down on the fact that we need to have a good system in place to control our raw material. Correct? And the last one, your stock holding. You should not have too much raw material also which you are holding in stock. Why? What will happen if I'm holding too much raw material? Then there could be chances of spoilage, deterioration, obsolescence. Apart from that, you are also blocking money in raw material unnecessarily. That money could have been used somewhere else. So when you're not going to use that raw material, what is the point of blocking that money in raw material? So again, you should have a good system in place so that this doesn't happen. Okay, if you are blocking your money in raw material, then remember that's an opportunity cost, because that money could have been invested somewhere else on which you could have got interest, which you're losing out now. That's an opportunity cost. Correct? So all these things can be taken care of if you have a good system of managing your raw materials. Okay, and that is what we are predominantly going to be studying in this particular chapter. So there are many systems that we are talking about. Now your numerical problems, okay, your numerical problems come from 2 or 3 important systems that we are going to look at. Okay, so the first system that we talk about is your EOQ. Okay, what does that EOQ stand for? Economic order quantity. So this is the first system for controlling your raw material. Correct? Now, in order to understand this particular system, we first need to understand what is EOQ. What is the meaning of EOQ? Economic order quantity. As the name suggests, okay, the quantity that you need to order, okay, when you place your order. So the quantity that you need to order when you are placing your order. So now why can't I order whatever I want? So today I feel like ordering 20 units, I'll order 20 units. Tomorrow I'll order 100 units. Day after I'll order 50 units. Then the next day I will order 100 units. Why can't I order whatever I want? Why is it that I need to order as per EOQ? Why? Because there are certain costs which are associated with purchase. Okay, so when you are ordering, there are certain costs associated with that particular order that you have placed. What are those costs? So if you come to the next page, let's write costs associated with purchase. Costs associated with purchase. So apart from the purchase price that you are paying to your supplier, you also have costs which are other costs which are incurred, which are classified into 2 types. What are they? Buying cost. This is also known as ordering cost, and carrying cost. So buying cost, carrying cost. Now the thing is, when we look at buying cost and carrying cost, first of all, what do you mean by that? Buying cost is that cost that you are incurring to place that order. Okay, so all the costs which are incurred, right from dialing the supplier and telling him that I want this particular material at this particular rate, in this particular quantity, till the time I receive the material at my factory gate. All the costs which are incurred in process. So you know that there is a purchase procedure, right? There is a purchase procedure. So in brief, if I were to tell you about the purchase procedure, it looks something like this. You have the stores. Stores is the place where material is stored, correct? So obviously the initiation of purchase should happen here, because the storekeeper will know what material is available and what is not. So once the storekeeper figures out, oh, this material is over, what will the storekeeper do? The storekeeper will send a purchase requisition to the purchase department. Okay, that basically the storekeeper is telling the purchase department that boss, material is over, please order so much quantity needs to be ordered. So now the purchase department will do all its research, figure out who the suppliers are if we are ordering for the first time. Okay, if we've been ordering, then the purchase department will already know who the suppliers are. Okay, so they will do all their analysis, and then finally the purchase department will send, after analysis, a PO. What is PO? Purchase order to the supplier saying that this material has to be sent by you at this quantity at this rate. Okay, so once the supplier sends the goods, this is our factory gate. Okay, at the factory gate an inspection will happen, okay, to see if the goods which have come are the same goods that I ordered. Correct. So there could be a scenario where at the factory gate itself I reject the goods. So what will happen? The truck who got the goods will take the goods back to the supplier, and then we will correspond with the supplier saying, boss, I ordered pink, you have sent green, send me a new consignment. Simple. So goods are returned. So when it comes to a book entry being made at this stage, is this constituting purchase return? No. Why? Because I have not yet recorded purchases. So when I have not yet recorded purchases in my books, from where will purchase returns come? So here the goods have come to your factory gate, you have rejected it at your factory gate only. Did you pass any entry in your books? No, you have not passed any entry. So when you have not passed a purchase entry, there is no question of a purchase return entry. For a purchase return entry, purchase entry should be there. So from here only goods are returned to the supplier. So physically the goods came, physically the goods returned, transaction complete. No entry in the books. But suppose at this stage, you check, you feel that the goods are okay, then what happens? Then from here, the goods are taken to the store. So once the goods are taken to the store and all the checking is done, there is something called as GRN, okay, which is drawn up by the storekeeper. GRN stands for Goods Received Note. The minute you do a GRN, it means you have acknowledged your liability towards the supplier. So the minute you do a GRN, it means you have purchased. Now, after the GRN is done, if you suddenly realize that these goods were not what I ordered, I should return them to the supplier, then that will constitute a purchase return. Okay, so essentially this is the, bird's eye view of how the purchase procedure looks like. So now from raising the PR to the goods coming into my organization, all the costs which are incurred, okay, they are all my buying costs or ordering costs. Okay, so many costs, salaries of staff, printing and stationery, the transportation of goods from the supplier to the factory gate, all of these are my buying costs. Correct. So all buying costs are incurred in this particular part. Yes or no? Now, so one is buying cost, also known as ordering cost. The other one is carrying cost. Now I have received the goods. Correct, I have received the goods. I have to carry them, right? I have ordered, my raw material came in. Now that raw material has to be carried in stores. So there are so many costs associated with that. There could be a deterioration, which is again my loss. Correct, there could be an obsolescence, which is again my loss. Correct, then there could be the storage space that I'm paying for. Again, that is a cost. Yes or no? I'm blocking my money in these goods. So the interest lost on the money that I've blocked in this is also an opportunity cost. And opportunity cost is an implicit cost, and in costing I take explicit and implicit cost into consideration. Remember, first chapter. So all these are carrying costs. All the costs associated with carrying my inventory. So when I'm talking about ordering in general from the supplier, why can't I order whatever I feel like ordering? Because of these costs. So now what happens? Now let's assume in a year, okay, let's assume in a year, I have 100 units to order in the full year. Okay, remember these costs, the time period will always be 1 year per annum. Okay, so in my example also I'm taking 1 year, which is 100 units. So my consumption of units in the full year is 100 units. Now I decide I'm going to place 10 orders. 10 orders means how many units per order? 10 units. 10 units per order. So every time I place an order, I get 10 units. So like that, I will place 100. I will place 10 orders. So I will get 100 units. Yes or no? So I have my buying cost and I have my carrying cost, which I'm going to incur. Okay. Now let's assume instead of ordering 10 units at a given time, I am ordering 20 units at a given time. So if I am ordering 20 units at a given time, what will happen to my number of orders? 5 orders, because now every time I'm ordering 20 units. So like that, 20 plus 20 plus 20 plus 20 plus 20, 100 complete. So how many orders did I place? 5 orders. Now guys, the minute I have reduced my number of orders, what will happen? My ordering cost or my buying cost will decrease. So imagine when I was ordering 10 times, I had to incur this cost 10 times. Now how many times am I incurring it? Just 5 times. So my ordering cost or buying cost is reduced by half. Correct? But what happens to the carrying cost? Now when I'm ordering 10 times, how many units am I ordering at a time? 10 units. So at any given time, any given point in time, I have only maximum of 10 units to carry. But now when I have increased my number of units per order, at any given point in time, I have 20 units to carry. So won't my carrying cost be more? So though I have decreased my buying cost, I have increased my carrying cost. Yes or no? So what we see is, as order size increases, buying cost decreases, carrying cost increases. As order size decreases, buying cost increases because I have to order that many more number of orders. Correct? So buying cost will increase, but carrying cost will decrease because order size is decreasing. Now, these two costs are contradictory to each other. You try to decrease the carrying cost, buying cost will increase. You try to decrease the buying cost, carrying cost will increase. Both are moving contradictory to each other. You can see here. So from 10 orders, when I moved to 5 orders, I was successful in decreasing my buying cost, but carrying cost increased off. Now similarly, from 10, if I move to 20 orders, then what will happen? Something else will happen. So it will become contradictory. So in order to keep these costs minimum, okay, so that my buying cost and carrying cost does not increase too much, in order to keep them together and minimum, what do? I will order at EOQ. I will order at EOQ. So EOQ is known as the most economic purchase. The most economic purchase. So exactly how much quantity should be ordered in one order is your EOQ. Is it okay? So you can order whatever you want. Nobody's stopping you. But if you do that, then your ordering cost and your carrying cost will increase. And if your costs are increasing, you're not a good manager. So what do? You order at EOQ. So if you're ordering at EOQ, it will ensure that your buying cost and carrying cost is kept minimum. So at TOQ, buying cost and carrying cost together, when I total it up, total carrying cost, total buying cost for the full year, together, when I add it, it's the least than any other level. Buying cost and carrying cost. For which period? For the full year. For the full year at EOQ will be minimum. So now the question comes, how do we calculate EOQ? So EOQ is calculated using Wilson's formula. Whose formula? Wilson's formula, which is given as root of 2AB by C. Root of 2AB by C. So what is AB and C? A is the annual usage of material. Okay, the annual usage of material. B. So remember guys, many times they will give you per month, per week. What do you have to do to calculate a annual? Convert it to annual. Okay. B. What is B? Buying cost per order. Buying cost per order. So when you are placing one order with the supplier, what would your ordering or buying cost be in relation to that one order? Guys, okay. C. Carrying cost per unit per annum. So the cost of carrying that one unit for the whole year, how much would it be? Okay, so of course there's a derivation for EOQ formula, which I usually do in my regular class, but we don't have the time now, so it's not really important for the exam. From the examination point of view, derivation of EOQ formula is not important, but of course when we are solving problems, we need to know these formulae properly. Okay, because from this chapter, this is a very, very important part. A lot of questions are being asked from here. Okay, so I know that some of you would want to figure out what the formula is, but at this stage, not possible. Okay, so we will quickly move on. So EOQ is root of 2AB by C. So that is the first thing. Second thing, guys, buying cost and carrying cost together are known as associated costs. Okay, so buying cost plus carrying cost together are known as associated cost, and at EOQ, buying cost is equal to carrying cost. So total buying cost is equal to my total carrying cost at EOQ, and together they are minimum. What do you mean together? That means for the full year, if I take my total buying cost, total carrying cost, add them up, the figure that you get will be the least for any other level. For any other level you calculate total buying cost, total carrying cost, you will see that that figure will be more than this figure. That is what it means. That's why they are saying that you should buy at EOQ, because it's the most economic purchase, which means your cost will be the least. Guys, is it okay? Now, how do we calculate buying cost? How do we calculate buying cost? Total buying cost. Total buying cost is nothing but buying cost per order into number of orders. Correct? Buying cost per order into number of orders. Guys, buying cost per order was what? B. Correct? In our EOQ formula, buying cost per order. So that is B. Correct? Into number of orders. How do you calculate number of orders? A by EOQ. A by EOQ gives me number of orders. How? 100 units is what I need in the full year. Okay, and when I'm ordering the first time, or whenever I'm placing an order, then in that order I am buying 10 units every time. So how many orders will I place? 10. Because every time I'm buying 10 units. But totally I need 100 units. So how many times will I buy? 10 times. How did you get that? A by EOQ, because this was EOQ. I was buying 10 units every time I was buying. Yes or no? So when it comes to an EOQ perspective, you will write A by EOQ. But suppose we are not calculating buying cost at EOQ. We are calculating buying cost at some other level. Then you cannot write EOQ here. So then you will write lot size, whatever they have given. A by lot size. Guys, okay. So if you are calculating at EOQ, you write EOQ. If you are not calculating at EOQ, you write whatever level you are calculating at. So I will generally call it lot size. Okay. And similarly, carrying cost How do you calculate carrying cost? Average inventory into carrying cost per unit per annum. So this is C, correct? Carrying cost per unit per annum. What is average inventory? Half into EOQ. So at TOQ we will use EOQ. If we are not calculating at EOQ, we are using some other level, then we will say lot size. So, or lot size, whatever be the case. Guys, okay? So I'll just give you a hint. At TOQ, we know buying cost is equal to carrying cost. We know the formula for buying cost and carrying cost. So at TOQ, when you equate both the formulae, you will get the EOQ formula. That's the derivation. I'm just saying, in case somebody was interested, for knowledge. Okay? So these are the formulae that we use in EOQ. Very, very important. Okay? So what kind of questions will come? They will say, first they will ask, they'll give you all the information. They will ask you to calculate the EOQ. Okay, then they will say calculate the associated cost at EOQ. Then they will say that, you know, the supplier is saying that he will give you a discount of 2%. So, you know, what would your decision be? So now again, you have to calculate when the supplier is giving you a discount of 2%. So if the supplier is giving you a discount, he will put a minimum condition there that you need to buy these many units from me. That means you're not buying at EOQ. So then what will you do? Then you will recalculate all the costs at that particular level. So how will you calculate? Same way. Buying cost, carrying cost. But instead of using EOQ, you will use lot size. Correct? So if I ask you, what is the total cost associated with purchase? What will you say? Ma'am, first purchase price. I have to pay the supplier also, no? So purchase price, then buying cost, then carrying cost. Correct? So total cost associated with purchase. What? Purchase price plus buying cost plus carrying cost. Guys, and when we are calculating this has to be per annum. It has to be per annum because buying cost and carrying cost is calculated per annum. Yes or no? See here, buying cost B into A by EOQ. Automatically A has come in the whole year. What was your requirement? Only then you got the number of orders in the whole year. So buying cost is for the full year. Carrying cost also for the full year. Why? Because C is carrying cost per unit per annum. So into number of units. So carrying cost also you will get for the full year. So when we are calculating associated costs or when we are calculating the total cost associated with purchase, it has to be calculated for the full year as a whole. So purchase price also has to be for the full year. So how will you calculate? A into unit cost. A is what? Requirement of units in the full year. Guys, okay? Everyone. Now sometimes when it comes to carrying cost, this C, that is carrying cost per unit per annum, they don't give directly in the problem. If they have given it to you directly, no problem. Okay, sometimes what they say is they give it to you directly. They may say 0.5 rupees per unit per month. But we need per annum, no. So what will you do? Multiply it with 12. Here they have given it directly. Sometimes they don't give it directly. They give it in the form of percentage. They say that carrying cost per unit per annum, or they say carrying cost is say 15% of average inventory. That is what they say. So on what do you calculate 15%? On the unit cost. On the unit cost. Average inventory is nothing but per unit. So whatever be the unit cost, say 10 rupees into 15%, since it's percent, it's for the full year, we directly get carrying cost per unit per annum. Guys, okay? Certain important points. Yes? Everybody? Okay. Yeah. Now there are some 1 or 2 more points which we need to discuss, but we will discuss that when the problem comes. Okay, when we start the problem. So what we're going to do now is, we finished EOQ. Now we will also see stock levels. Okay, so we will do both, then we will solve problems. And then we will move on to the next part. So as and when we keep finishing a given concept, we will do the problem on that particular concept. So still there are 2-3 important points left in EOQ, but we will discuss that only when we solve the problem. So as and when we are solving the problems, we will discuss it. But EOQ and stock levels go hand in hand. So now we will move on to the next system of inventory control, which is stock levels. Okay, so let's move on to stock levels. So guys, various organizations use this system to again exercise control over stock. So for each material which is stored in the stores, stock levels are created. Okay, so what are these stock levels? Stock levels can be divided into the following types. First, reorder level. This is not stock level. Maximum level, minimum level, average stock level, danger level, and buffer stock. Okay, so first let's quickly understand what they mean. Okay, reorder level. Reorder level is the level at which a new order is placed. So the minute your inventory levels falls to reorder level, now you should call up your supplier and tell him that send this particular material in this particular quantity. So if you are using the EOQ system along with stock levels, you will order the EOQ quantity. So stock level, reorder stock level tells us when to order, right? And reorder quantity tells us how much to order. That is the difference between reorder level and EOQ. Guys, okay? So reorder level, as the name suggests, reorder. So the minute my inventory level falls to reorder level, it is now time for me to place my fresh order. And what comes in that fresh order is my reorder quantity or economic order quantity. Guys, okay? Everybody, so how do you calculate reorder level? Before we go to the calculation part, we need to remember that when we are fixing up the levels, the various stock levels, these stock levels are fixed on the basis of 2 criteria. Okay, first criteria is usage. Okay, and the second criteria is lead time. So what do you mean by usage? The consumption of raw material. So usage or consumption of raw material is classified into 3 types: minimum, maximum, average. So if average is not given, you can easily calculate. How will you calculate? Minimum plus maximum by 2 will give you the average. If it is not given, if it is given, please use it. Sometimes in the problem, you will see they have given you minimum, they have given you maximum. The average consumption is given, but it is not the same as what you would get if you would mathematically divide minimum plus maximum by 2. So what do? Keep quiet and use what they have given. Okay, when we say average, we cannot mathematically use the average only always. It could be here and there a bit. It's okay. Approximately. So please use what they have given. If they have not given you, please compute it. Is it okay? So don't get confused. Don't be like, oh, the answer was supposed to be 5, but now they have given 6. So should I take 5? Should I take 6? What will you take? Take 6. Because they have given you 6. Okay. Similarly, lead time. What is the lead time? Guys, lead time is the time lag or the time gap between placing the order and getting the materials. Now, if I'm placing the order today, right now I won't get the materials. No, there are so many things. I'll place the order. I will talk to the supplier, tell him all of these things is what I require in the stores. Then the supplier will get all the material ready. Then the supplier will send the material to my factory. So the transportation time. Then at the factory, gate pass inspection will happen. Then I will check if everything is okay. Then those materials will be transferred to the store. So many things are happening. So the time gap between placing an order and receiving the material in your stores is your lead time. Okay. So now lead time can also be divided into three types. What? Maximum, minimum, average. What could the maximum time be? What is the minimum time which I will take? And what is the average time? Guys, okay. So it's like me saying, minimum I would need 5 days to finish your crash course. Minimum. It cannot be less than 5 days. But maximum could be 7 days. Maximum. I don't think it will go beyond 7 days. But minimum to I need 5 days. Average will be what? Whatever. 7 plus 5 divided by 2. Which is 6. So same here. Lead time. So now considering these parameters, usage and lead time, these formulae have been constructed for calculating various stock levels. So reorder level, where you are placing the new order. What you are placing in that order is your EOQ or ROQ. So EOQ is economic order quantity, ROQ is reorder quantity. Are they the same? No. EOQ is what you have placed as per Wilson's formula. ROQ is whatever you are placing. Not as per Wilson's formula because of whatever difference. It's not necessary that you will always place as per Wilson's formula, right? There could be so many things that may change in the practical scenario. It is not probably possible to order as per Wilson's formula. Now Wilson's formula says 3000 should be ordered every time. But what if your supplier says, no, I cannot sell 3000 at one time. It's too less for me. If you are buying from me, you have to buy 5000 only. And you don't have a choice. You have to place an order for 5000 units. Correct? Or what if your product is a seasonal product? If it's a seasonal product, all your production will happen only in a certain period of time. So you have to produce everything in that time only. So you cannot really order at EOQ, not possible. So sometimes it is not possible to order at EOQ. Or the supplier says you order more, I'll give you more discount. And that reduces your cost actually. So then you will not order at EOQ. Correct? So if we are not ordering at EOQ, it becomes ROQ. Reorder quantity, lot size, any other lot size. Okay, so when we are ordering, when we are placing a fresh order, that is reorder level. What we are ordering is my EOQ or ROQ. So how do we calculate reorder level? Reorder level formula is maximum usage into maximum lead time. Okay, now as of now, we do not have the time to challenge these formulae. Again, I do this in my regular class. How to derive these formulae. Why is it maximum into maximum? Now we cannot do it. Okay, so right, it's anyway not important from the examination point of view, but it will help you in understanding better. So right now we will only look at the formulae. Reorder level is maximum lead time into maximum usage. Okay. One more formula for reorder level is there. I will tell you later. Okay. Next. Maximum stock level. Guys, what is maximum stock level? This is the maximum level of inventory that you can hold at any given point in time. If you try to hold more than this, what will happen? You're going to unnecessarily block your funds in inventory. No point. You're going to lose out on interest, bad management. And you're subjecting your inventory to a huge risk. Risk of obsolescence, spoilage, deterioration, whatever be the case. So this is the maximum that you can hold. Don't go beyond this. Okay. So that's why the level is fixed. So how do you calculate maximum level? See here, reorder level plus reorder quantity. If you are ordering at EOQ, then it will be economic order quantity. If you are not ordering at EOQ, it will be reorder quantity minus minimum usage into minimum lead time. Guys, usage and lead time will go hand in hand. If you are using minimum usage, lead time also has to be minimum. You cannot have minimum usage and average lead time. So it always goes hand in hand. Maximum will go with maximum, minimum will go with minimum, average will go with average. Is it okay? So that is your formula for maximum level. I will tell you one way to remember these formulae once we see all the formulae in place. Okay. Next, minimum stock level. Now, minimum stock level is the level below which your inventory should not fall. Whatever it is at any given point in time in your organization, this much inventory should be there in your stores. Because if it falls below this, there is a chance your production schedule can get hampered, which is very dangerous because then you will not produce as per your schedule. So this is the minimum level of inventory that you must maintain at any given point in time. So how do you calculate this? Minimum level is given as reorder level minus average usage into average lead time. Okay, so now I will just tell you how to remember these formulae. Okay, first formula that you need to remember, reorder level. Reorder is maximum into maximum. Remember that. Now, if you have used either of the three once, then you cannot use it again. Now, for reorder level, I have used maximum into maximum, which means maximum into maximum cannot be used again. Over. Okay. And maximum into maximum cannot be used in maximum level formula. Similarly, minimum into minimum cannot be used with minimum level formula. So those are the two things that you need to keep in mind. So reorder level is maximum into maximum. Already used it. Now let's see minimum level. Minimum level is reorder level because it is minimum level less. We are minusing it. So reorder level minus what? Minimum, what is left now? Minimum into minimum, average into average. Now minimum into minimum I cannot use here. So what will I use? Average into average. Okay. So I have used average into average. And finally maximum level. Maximum level is highest. So reorder level plus something to make it higher. So plus ROQ minus. Now I have used maximum into maximum. I have used average into average. What is left? Minimum into minimum. So I'm going to use minimum into minimum. Okay, so that is how you try to remember these formulae. Okay, but if you know the derivation, then you don't need to remember the formulae. Okay, next, average level. Average level is nothing but the average between the maximum and the minimum level. So how do you calculate? Mathematically, maximum level plus minimum level by 2, or one more formula is there. Minimum level plus half EOQ. If we are not ordering at EOQ, we are ordering at ROQ, then it will become half ROQ. Guys, is it okay? You can use either of the two formulae. Both formulae will give you a different answer. It's absolutely alright. Is it okay? Everybody? Okay. Now, some organizations fix a danger level also. Okay, and usually this danger level may be fixed below minimum level. So minimum level shows my inventory should not fall. But suppose it falls and if it touches the danger level. Now danger level, as the name suggests, danger, correct? Now my inventory has fallen to a level where I cannot order the normal way. I cannot place my purchase order, then wait for the goods to arrive and then do a gate pass inspection. No. If my inventory falls to the danger level, I have to take emergency purchase action. Okay, so it's like saying, suppose in your kitchen, like your mom, she cooks food, right? So suppose there's a system in place. Every time, say, the flour gets over or the rice gets over, she informs you and then you inform your dad, and then your dad goes to the market whenever he's free and he brings it. Correct? So this is the normal system. Okay, but now everyone is sitting at the table and your mother realizes that, okay, there is no flour to make chapati or there is no rice to give with sambar. Correct? So now what can you do? Now can she tell you and then you tell your dad and then your dad take his own sweet time to go to the market and come back? No, not possible. So now she has to take immediate purchase action. She does not inform either of you. She immediately takes her bags and runs to the grocery store. Correct? So this is immediate purchase action. I am doing something that I'm not used to doing. So if my inventory falls to the danger level, the organization cannot follow the normal purchase procedure. The organization takes immediate purchase action, because if this is not taken, then you will not have the raw material inventory to continue with your production process. It will completely hamper your operations. So danger level formula is average usage into lead time for emergency purchases. This is a new lead time. This is not your minimum lead time, not your maximum lead time, not your average lead time. This is a new lead time which is put in place for emergency purchase action. Guys, is it okay? And yeah, average usage formula is given. Average usage is nothing but minimum plus maximum by 2. So leave this. This we already know. And average lead time also, maximum lead time plus minimum lead time by 2. This also we already know. So these are the formulae. But there was one formula which we still had to do for reorder level. What is that formula? So guys, there is something called as buffer stock. So you see here, I've given it here also. Buffer stock. Buffer stock is also called as safety stock. Okay. So sometimes what happens, when the material comes in, the store's keeper, okay, he may take one entire consignment of material and hide it off. Okay. Tomorrow, in case something happens, I have something on hand. It's hidden. Nobody knows about it except for me. That is called as safety stock or buffer stock. So why is this? To mitigate sudden demand. To mitigate sudden demand. So suppose the organization uses this particular policy of safety stock. Okay. Then what happens to your reorder level? Then your reorder level will not be maximum into maximum. Then your reorder level becomes, yes, so if they've given us safety stock or buffer stock, then what will happen to my reorder level? My reorder level will no longer be maximum into maximum. What will it be? It will be safety stock plus lead time consumption. Plus lead time consumption. What is lead time consumption? What you are consuming in that lead time which is given to you. So once reorder level changes, automatically maximum and minimum stock level will also change. Yes or no? Because maximum and minimum stock level both use reorder level. So you don't have to adjust this there. It automatically changes. So if safety stock is given, you only need to change reorder level. The other levels will automatically adjust. Guys, correct? So if safety stock or buffer stock is given, then reorder level will be safety stock plus lead time consumption. Okay. So if average usage is not given, we will calculate average usage. How? Minimum plus maximum usage by 2. If average lead time is not given, we will calculate average lead time, maximum plus minimum lead time by 2. If they have given the average in the question which does not match with the mathematical computation that we would have done, it is all right. We will take what they have given to us. Guys, is this clear? So this is your stock levels. We've done our EOQ, we've done our stock levels. Now what we will do is, before we move on to the other parts of inventory control, the techniques of inventory control, we will first solve problems on this particular part that we've already studied. So come to page number page number 117. Page number 117. Yeah. Shall we start? So question number 1, calculation of EOQ and associated costs. So let's calculate. Aditya Brothers supplies surgical gloves to nursing homes and polyclinics in the city. These surgical gloves are sold in pack of 10 pairs at a price of 250 rupees per pack. For the month of November 2015, it has been anticipated that a demand for 60,000 packs of surgical gloves will arise. Aditya Brothers purchases these gloves from the manufacturer at rupees 228 per pack within a 4 to 6 days lead time. So can you all explain to me what is happening till now? What is happening till now? So Aditya Brothers purchases these gloves from the supplier. At what rate, guys? 228. It purchases, see here, purchases these gloves from the manufacturer at 228 rupees per pack, and 4 to 6 days is usually the lead time. So they've given 4 to 6 days as the lead time. What is 4? Minimum lead time. What is 6? Maximum lead time. So if I ask you to calculate the average lead time, can you calculate 4 plus 6 by 2, which is 5 days, correct? So what is this 250 rupees per pack? Sales, the selling price of the gloves. So the gloves are sold in a pack which consists of 10 pairs, and that entire pack is sold for 250 rupees. Is this relevant to me? No, I don't care about at what rate it is sold. It does not matter to me. Simply they have given that there to confuse us. That's it. Because you will see this 228, you will see this 250, you will not realize, in tension you will take 250 as the purchase price. Jabki that is the sales price. Is it okay? So this is one waste figure simply given to confuse us. Next, the ordering and related cost is rupees 240 per order. What is this? The buying cost per order. The buying cost per order is 240 rupees. The storage cost is 10% per annum of average inventory investment. So 10% is my storage cost. First of all, what is storage cost? Carrying cost. How do I calculate this? 10% of what? Of purchase price. What is purchase price? 228 rupees of average inventory, which is nothing but per unit. So you get your carrying cost per unit per annum. This is per unit and 10% per annum. Yes or no? So what are we supposed to do? Required. Calculate the economic order quantity. Okay, we'll calculate. We know A. We don't know A actually. We have to calculate A. Correct? So they say that for the month of November, it is anticipated that the demand is 60,000. Which means for 1 month. A is what? Annual demand. So I can easily calculate A. B is given. C I know how to calculate. So I can easily calculate EOQ. Wait. Next. Calculate number of orders needed every year. How? A by EOQ. So once you get EOQ, you can easily calculate A by EOQ. You will get your number of orders. Very simple. 3. Calculate total cost of ordering and storage of surgical gloves. What are they asking you to calculate? Associated costs. So total buying cost, total carrying cost. Buying cost formula please. A by EOQ into B. Carrying cost formula, half into EOQ into C. You calculate. Since we are calculating at EOQ, remember buying cost and carrying cost will be equal. It has to be equal. If it's not equal, you've made some mistake at EOQ. Correct? We will calculate the total and show it to them. Part 4 we will read later. So shall we solve this much? So let's go to the problem. Classwork. Question 1. Yes, so first A, we'll calculate A, but guys, when you're using connotations like A, B, C, please explain what they mean. So what is A? A is annual demand, which is 60,000 into 12, 7,20,000 packs. Guys, correct? No. B, what is B? Buying cost per order. That is already given to us. Given? No. 240 rupees already given to us. No tension. Then C, carrying cost per unit per annum. So guys, how much? 10% into 228. 22.8 per unit per annum. So first part, EOQ, root of 2AB by C. So substitute and show. How much, guys? How much? How much? 3? 9.2, is it? 0.3. So 3893 packs. Round off. Three 3893 packs. What is the next thing? Number of orders. So let's calculate number of orders will be A by EOQ. So A was 7,20,000, 3893 packs. So how much do you get? 185 orders. 185 orders. Guys, next, buying cost and carrying cost. So calculation of associated costs. So first one, buying cost, which is A by EOQ into B. So how much do you get, guys? 7,20,000 by 3893 EOQ into B was 240. So how much do you get? 44,000. No, 44,387. Yeah. Or you can directly take 185 orders into 240. That is also okay. You'll get a different answer, but that's okay. That's because of the round off difference. You cannot help it. When you calculate EOQ, you would have got 3893 point something recurring, right? If you take the whole recurring figure and then use it everywhere, you'll get exactly to the pi. But that we can't do. We don't have so much time. Don't waste time. Next, carrying cost, half EOQ into C. So half into 3893 into, guys, how much was C? 22.8. How much do you get? 44,380. Is my answer wrong? It's different, no? Guys, it's different because of round off difference. That's it. Like I said, if you take to the pi, that is all those recurring digits for 3893 and use that figure only everywhere, wherever it is coming, you will get the exact answer. Okay, but this difference is because of round off differences. We cannot do anything. So total associated costs will be, guys, how much total it? 88,767. 88,767. Move on to the next problem, next part of this particular problem. So let's read. Determine when the next order is to be placed. Okay, they're asking you to figure out when the next order must be placed. Assuming that the company does not maintain a safety stock, so there's no safety stock that is maintained, and that the present inventory level is 10,033 packs with a year of 360 working days. So right now in stock, I have 10,033 packs of gloves. Okay, this is my present inventory level. So they are asking you, when should you place the next order? Now I know that if I am to place an order, it takes 4 to 6 days. Yes or no? So if I'm placing the order today, then I should have enough inventory with me for those number of days. Now should I take 4 or should I take 6? 4 is minimum, 6 is maximum. So I will take average. 4 plus 6 by 2, which is 5. So for 5 days on an average, it takes 5 days for the inventory to come. So if I'm placing my order today, I must have 5 days worth of inventory. For that I need to know how much is 1 day's worth of inventory. Do I have that? No. So first I need to calculate that. Then I will figure out how much inventory will be required for 5 days. Then I will see how much I have on hand. And then accordingly I'll decide when to place the order. Yes or no? So the first order of business is what? To find out in 1 day how much inventory do I need. So how do I find that out? How do I find that out? They've said that 360 days, my year has 360 days, and in 1 year I need 7,20,000 gloves, packs. Correct? So I can find out for 1 day how much I need. Correct? So let's find out. So part 4, inventory or glove packs required for 1 day. 7,20,000 is annual for 360 days. So how much would it be for 1 day? 2,000 packs I would need per day. Now whenever I am placing the order, whatever said and done, 5 days it will take for the order to come. So I need 5 days worth inventory with me at any given point in time, whenever I am placing the order. Yes or no? So inventory required during lead time. I don't know. Correct? I don't know. I need to find that out. First of all, how much is my lead time? Average 6 plus 4 by 2, which is 5 days. So for 1 day, if I need 2,000 packs, for 5 days, how many packs would I need? 10,000 packs. So total packs required during lead time, 5 days into 2,000 packs. How much? 10,000 packs. So at any given point in time, I need 10,000 packs. Now how many packs do I have? 10,033 packs. I have only 10,033 packs. So when do I place the order? Right now. I cannot afford to place the order at any other time. What will happen if I place the order tomorrow? What will happen if I place the order tomorrow, not right now? then I will fall short of 2000 packs. Because today I will use up 2000, which means I'm left with 8000. So if my lead time is not 4 days, it is actually 5 days. And what if it becomes 6 days? Then I don't have that much inventory on hand. Suppose instead of 10,033 inventory level, they had said 8,000 packs. Then what would you have done? Then it's already late. I should have placed the order yesterday. Guys, correct? No. I should have placed the order yesterday. But right now in my inventory, how many packs do I have? 10,000 packs. And it will require 10,000 packs for me to place the order and the order to come, because it's exactly going to be 5 days on an average. Yes or no? So what do? Place the order right now. So during lead time, I need 10,000 packs. Present inventory level is also 10,033 packs. Guys, correct? So place order now or immediately. Guys, correct? Did you all understand this? Adjustment little different. That's why I put this question here, so that we can understand what this adjustment means. Shall we move on? Yeah? Okay. Next question. Let's read. Or hold on. No, we will do the next question only. Calculation of ROQ in tabular method. Okay, so now we are moving away from the concept of EOQ in this particular problem. So let's see what happens. So first, the quarterly production of a company's product which has a steady market is 20,000 units. Guys, 20,000 units and quarterly production. Please note, each unit of a product requires 0.5 kg of raw material. The cost of placing one order for raw material is rupees 100 and inventory carrying cost is rupees 2 per annum. So they've given us directly. Buying cost also they've given, carrying cost also they've given. But A, how do I calculate A? Now my question to you, hold on. My question to you, when I calculate A is calculated for final product or is A calculated for raw material? Which chapter are we studying? Material. Which means A is calculated for raw material. What you are going to purchase from your supplier. Correct? So here they have said the quarterly production of a particular product is 20,000 units. What product is this? The finished product. Correct? So quarterly production is 20,000, which means for the full year, what are you producing? 20,000 into 4, because 4 quarters. But this is of the final product. What have they said? Each unit of the final product requires 0.5 kgs of raw material. Now you need A for the raw material. So how will you calculate? Into 0.5. So you will get your raw material units which have been used in the full year. So A we can calculate, B is given, C is given. Okay, the lead time for procurement of raw material is 36 days. So it takes 36 days to get the raw material, and safety stock of 1000 kgs of raw material is maintained by the company. So safety stock is given. So if safety stock is given, what will it hamper? reorder level. My reorder level formula will be safety stock plus lead time consumption. Correct? The company has been able to negotiate the following discount structure with the raw material supplier. So the raw material supplier has given us discounts based on what we are purchasing. So if my order, one order is up to 6,000 kgs, then I don't get any discount. But if I'm ordering anything between 6,000 to 8,000 kgs, my supplier gives me a discount of 400 rupees. If I'm ordering between 8,000 to 16,000 kgs, my supplier is giving me a discount of 2,000 rupees. 16,000 to 30,000 kgs, 3,200 rupees. And 30,000 to 45,000 kgs, my supplier is giving me a discount of 4,000 rupees. So what am I supposed to do? First, calculate the reorder point taking 30 days in a month. So how will I calculate reorder point? What is reorder point? Reorder level. How will you calculate? Safety stock plus lead time consumption. Okay, so we will have to use that formula to calculate reorder level. Next, B. Prepare a statement showing the total cost of procurement and storage of raw material after considering the discount of the company. This is wrong. Discount of the company when we place, make that when we. When we place 1, 2, 4 or 6 orders in the year. Okay, so if you are placing 1 order, 2 orders, 4 orders or 6 orders, they have asked you to calculate the total cost that would be associated with that particular order. Okay, so when you're ordering that many number of orders, you're supposed to calculate the total cost. So we'll have to draw up a table for one order. What would be the buying cost, carrying cost, and adjusted with discount? How much would I get? When I have 2 orders, what will happen? When I have 4 orders, what will happen? When I have 6 orders, what will happen? And then I have to choose the best level and give it to the person who's correcting the paper. Okay. So first we'll do this, then we'll do part C. Yes. So come to your classwork. Come to your classwork. Question 2. So first, what are we supposed to calculate? Reorder level. Reorder level. What was reorder level, guys? Safety stock plus lead time consumption. Plus lead time consumption. Now, first of all, for lead time consumption, I need to calculate the number of units consumed in my lead time. How much was my lead time? 36 days, which means consumption also should be per day. So when I get consumption per day, I will multiply it with 36 days. But do I have the consumption per day? No, I have to calculate that. So first, working note number 1. Calculation of consumption per day. For that, first I need to calculate A. What is A? Annual usage of material. Which is what, guys? They have given, we discussed it, 20,000 units into 4 would give me my annual production, into 0.5 kgs would give me my raw material usage per annum. So how much do I get? 40,000 kgs. So consumption per day will be how much? 40,000 kgs divided by 360. Divided by 360. Why 360? They've given 30 days in a month. So 30 into 12 is 360. Yes or no? So 360 days. So how much do you get? 1 not 11.1 1 it goes on, is it? Okay. So this is my consumption per day. Correct. So now I will come here. Let's calculate. Guys, how much was the safety stock? 1000 kgs plus lead time consumption. So 36 days into, see, if you use 111.11, you will get a recurring decimal. Instead, just put 40,000 by 360 only. It will get cancelled. 36 and 360 will get cancelled. So you will get a whole number. So how much do you get? 4,000 kgs. 4,000 kgs. Five thousand kgs. Guys, okay. So this is your reorder level. Now what? Now we have to show the cost when we are ordering 1 time, 2 times, 4 times, 6 times. So let's show that. Statement showing costs associated with purchase when different orders are placed. When different orders are placed. So orders, they've given what? 1, 2, 4, 6. Correct, no? 1, 2, 4, 6. Next, guys, lot size. Lot size. How much will your lot size be when you're ordering 1 time? The whole annual consumption. The whole annual consumption you're ordering 1 time. So your lot size will be 40,000 kgs. So in other words, can I say lot size will be A by orders? Correct? Orders are A by lot size? Yes or no? Number of orders are A by lot size. So now if I want to calculate the lot size, what will it be? A by orders? Yes. Now what will the lot size be when I'm ordering 2 times? 20,000. How? Total A or total consumption in the year is 40,000. I'm ordering 2 times. So how much will I order each time? 20,000. So 20,000 kgs. Next lot size, 40,000 by 4. So how much do you get? 10,000 kgs. And the last one will be 40,000 by 6. So how much do you get? 6,667 kgs. Right? So I've got my orders. I've got my lot size. Now it's very easy for me to calculate the buying cost and the carrying cost. So how do I calculate buying cost? We will write the formula on top. Guys, buying cost is A by EOQ or number of orders. You've already calculated. No need to calculate again. But you write the formula into B. So here 1 into what is the ordering cost per order? 100 rupees. See, it's given in the problem. So 100 rupees. So you get 100. Here 2 into 100 rupees. 200. Here 4 into 100 rupees. 400. And here 6 into 100 rupees. 600. Guys, don't write EOQ here. We are not using EOQ, no? We'll write lot size. When you're using EOQ, you write EOQ. When you're not using EOQ, you write lot size. Next, guys, carrying cost. How do you calculate carrying cost? Half into lot size into C. Half into lot size into C. So let's calculate half into lot size. How much? 40,000 into C. How much is C? Rupees 2. So 40,000. Next, half into lot size. How much? 20,000 into rupees 2. Same thing. 20,000. Next, half into lot size. 10,000 into rupees 2, which is 10,000. And the last one, half into 6667 lot size into rupees 2, 6667. Guys, so I add this up. That's it. Discount. We have to get discount also. No, that discount will reduce my cost. So let's write discount. When I'm ordering 40,000 kgs at one shot, how much discount do I get? The last one. See the last part in the table, 30,000 to 45,000 kgs. If I'm ordering, I'm getting 4,000. So let's put 4,000 here. In brackets, it denotes minus because it's going to reduce my cost. So when I'm ordering 20,000 kgs, how much discount do I get? 3,200. It falls between 16,000 and 30,000 kgs. So how much? 3,200. Guys, next, 10,000 kgs. 2,000. It falls between 8,000 and 16,000. So 2,000 rupees. And when I'm ordering 6667, then I get only 400 rupees as discount. So, guys, net cost. So this is nothing but buying cost plus carrying cost minus discount. Buying cost plus carrying cost minus discount. Calculate and tell me how much. 36, 100, 17,000, 8,400, 6867. So which is the best option? The last one, because it shows the least amount of cost. So you can write there, most optimum level. When the supplier gives discount, will be when 6 orders are placed, as the net cost associated with purchase is the least. As the net cost associated with purchase is the least. Guys, okay? Everyone done? Last part of this problem. Okay, state the number of orders which the company should place to minimize the cost after taking EOQ also into consideration. Also calculate associated costs at EOQ. Guys, till now we never calculated EOQ only. Yes or no? We calculated all other levels. So, it is not necessary that the company always has to order at EOQ, I told you. Right? Because if the supplier decides to give discount, then your cost may end up being lesser than EOQ also. So now in the third part, they're asking you to calculate EOQ. They're asking you to calculate number of orders associated when you are ordering at EOQ. And they're also asking you to calculate the costs associated with purchase at EOQ. Which means when you calculate buying cost and carrying cost now, both should be equal. Because it will be at EOQ. So shall we? So let's calculate the third part. So A was, guys, how much did we calculate A? 40,000 kgs. This was working note number 1, right? Connected there. We calculated it at 40,000 kgs, which was working note number 1. Yes. B was buying cost per order. We never wrote this anywhere. So we will write it here. The meaning of B, buying cost per order. Guys, how much was it? 100 rupees per order. C was carrying cost per unit per annum, which is rupees 2 per unit per annum, already given to us. So EOQ will be root of 2AB by C. So 2 into 40,000 into 100 by 2. 2000 kgs. This is my EOQ. So calculate number of orders. Number of orders will be A by EOQ. 40,000 kgs by 2000 kgs. So you get 20 orders. You get 20 orders. Guys, okay? Everyone. Now what? Calculation of associated costs. So, which is nothing but my buying cost, correct? So buying cost formula, guys, A by EOQ into B. So A is 40,000 by 2000. I've already calculated that on top, into 100. So how much you get? 2000 rupees, correct? Or carrying cost should also be 2000 rupees because this is at EOQ. So carrying cost, half into EOQ into C. So half into 2000 into 2. 2000. So total associated costs 4000. Shall we continue? No, ma'am. So we'll continue with the remaining questions tomorrow. I'll see you at 10 o'clock. Okay. So have a great day, guys. If possible, try to check the RTP problem, okay, on cost sheet. we have finished cost sheet. Material, the RTP problem in the material, we haven't done that particular concept yet. But the cost sheet problem we have finished. That is problem number 5, I think, in the RTP. So try solving it. And if you can't get through it, go to my channel, that is the Advait Learning channel. Okay, in that, go to playlists, look for the RTP playlist, go to problem number 5. I have separately recorded each problem. So that will help you in solving that particular problem. Do it today only, so that tomorrow if you have any doubts, we can clarify it in class only. Okay, so problem number 5 only. Okay, so side by side we are solving the RTP also. Okay, so see you guys. Good night. Have a great day.